So this briefing today, Wednesday the 7th, we have two councillors online, Councillor Paniora, Councillor Aaron Wilson-Collins. Welcome.
Morning.
Remind you, leave your video on so the council staff can know that you're there when they need to know. So first up today we have Metrics update from Brad Olsen, who's here in person. Welcome, Brad. Thank you.
Brilliant, yes. Kia ora and good morning, everyone. It is fantastic to be back in person, especially into my home region, and with some nice weather. I did think about going for a swim this morning, but thought I'd try and still look presentable for your good selves. What I thought I'd do for the next sort of 30 minutes or so is take you through some of the economic trends that we're seeing at both, or all the way through from global levels down to national, and then some local trends as well. And then we'll do questions after that, if that's right, only because I have a canny knack of answering your question about 2 slides later. All right, so cracking through on it then. Normally there's a slightly more provocative title that we have for our talks, but we've gone with figuring out where things land in 2024, because it sort of seems a little bit hard to figure out, even from our point of view, how exactly we think this year plays out. On one hand, we know that we've done a lot of the heavy lifting around interest rates, inflation starting to get into a better position. That's all good news. On the other hand, we know that that means that households themselves are feeling the challenges a lot more. They're being hit with those cost of living increases that have built up over time. It might be good, for example, that food prices only increased, or fruit and veg prices only increased 3% over the last year. They're still up 44% from pre-pandemic levels. So you might be getting smaller annual increases, but on top of larger ones over time creates some challenges. Let's talk about inflation, though, because that is where, well, still the chief economic concern. It's still the thing that's going to dictate economic outcomes as we go forward. We are seeing some improvement there. Headline inflation has gone from 7.3% down to 4.7%. That's good, but still quite a far away from where the Reserve Bank wants to be. They're targeting 2% as a midpoint. They want to get it somewhere between 1 and 3. So 4.7 is still a fair way outside the band. The other challenge is that when you look through the numbers, although we've seen that decline or that deceleration to 4.7, we know that a lot of that is not coming from what we're doing domestically, where it's really the largest falls are coming through internationally, which is great, but it had nothing to do with us that they've fallen, which also means that if they go up again, there's nothing we can do about that either. You can see on the chart behind me or on your screen, the likes of non-tradable inflation, so domestically based inflation, is still sitting at about 5.9%. So that's still a lot higher than we'd want to see it. You can see that tradable, so overseas based stuff, particularly the likes of fuel and what have you, had spiked up quite a bit higher, has now come down quite a bit. So we're still quite worried. We're also, I think, seeing what we're terming 3 buckets of inflation trends this year. First bucket is in interest rate sensitive spending. Now that has seen pricing pressures come back quite a bit, particularly if you think of some of the more non-essential goods. Think couches. Couches, not something that a household needs to buy, therefore they're not at the moment. If I'm someone who's selling couches, I'm sitting there holding a bunch of stock that I can't get rid of. That means that 1, I'm definitely not going to be putting up my prices if I can't even sell the stuff at the moment. 2, I might have to discount a bit more. And in fact, we've been seeing the highest levels of discounting in a few years coming through. So that's encouraging on that front. Bucket 2 is stuff that costs have been rising for a while, but they haven't fully passed through. The likes of local council rates are a good example. So too is insurance. You generally only reset those once a year. And so although they've been going up, households only sort of bite the bullet on those sort of once every 12 months. So they're feeling a little bit delayed at the moment. And then you've got some of the essential costs. So again, the likes of food, the likes of rent, the likes of energy. Energy's all right at the moment. Fuel prices are better than they had been. They're sort of holding a bit more stable. Still expensive relative to what we'd like to pay, but better than sort of after the Russian invasion of Ukraine. Food prices, again, high, starting to get back to more normal seasonal patterns, though, so that's encouraging. Although I would note that kumara are still, I think, 260% more expensive than a year ago. And that's just a very good example of supply and demand. Takapuna, which supplies just about all of it, lost 70% of the crop. So even if you want if you're someone who's wanting to sell a whole bunch of kumara, there's just not that much left. And either you have to decide that you sell out real quick at a normal price, and lots of people go without, or normal pricing pressures mean that you use that to understand how to work out how you sell your scarce resource.
Brad, can I ask a question? Just clarification. Thank you, Mr.
Yeah. I'll take the clarity.
Yes, let's have questions at the end, Ash.
And then you'll have to bring the graph again.
Okay, yeah, I can do that as we go. Now, someone asked before about what are our picks. In a sense, we're continuing to expect that inflation declines, and in fact, slightly faster than we had originally picked. You can see our forecast here, Infometrics forecast for October in the dark blue, and then our latest in February that came out last week. And we're seeing that fall to below 3% sometime this year. That's the good news. The slightly more challenging news is that we think it takes a bit longer to get it down towards that 2% that the Reserve Bank wants to see. And that's one of the questions we're asking ourselves at the moment, is that although we've been able to carve out a lot of that inflationary pressure, we are worried there's a little bit more persistence in there. Now, you might look at that and go, well, still three's a lot better. The challenge is that if we continue to pop around that for a while, you do question whether or not the Reserve Bank thinks it's actually done enough if it isn't able to get sort of that final last 10 metres or so over the line. What's also interesting, and what we don't talk about as much, is actually the regional effects of inflation a little bit more. And that's seen a little bit clearer in this chart, which looks at building cost inflation, so the price to build a new home by broad region. Now, Stats NZ doesn't break it down to territorial authority or even region half the time, but you can see here the orange line for the rest of North Island peaking quite a lot more than other parts of the country. The likes of Wellington in light blue coming in a lot shorter than the rest of the country as well in terms of that building cost profile. Now, I use this because it's a little bit easier to display than some of the other charts, but we see this reflected in headline inflation at a regional level. You are seeing generally more pricing pressures coming forward for the likes of, I'll call it provincial New Zealand, outside of the sort of three main urban centres and their neighbouring areas. So you can see that both of rest of North Island and rest of South Island had slightly higher building costs in general. South Island not quite as much in more recent times, but at a headline level we have seen that greater pressure. So I guess just noting that although we don't talk about inflation as much at a local level, those pressures are still pretty intense. And that sort of makes sense. Often in your urban centres, you've got a little bit more resource to redeploy in different areas. There's a bit more flex. In local provincial economies, you don't have quite as much flex, just because you don't sort of have that size or scale. Now, this one will be, in a sense, of no surprise to anyone who's been looking at council finances, but will still shock nonetheless, and that's the fact that although the cost of lots of things for households has gone up, CPI inflation, like we generally measure it, is a great number if you are a household and tells you a lot about household costs. If you're a council, you probably don't buy a lot of bananas, and therefore CPI is not necessarily your best metric. In fact, when we have looked at the likes of capital cost inflation, so particularly when you're wanting to build big physical assets, this chart becomes quite important. The dark blue line here is the level of prices that we had up until 2021 and what we would have expected after 2021 had those previous trends held. So when the LTP was last set, for example, that would have been broadly your expectation around costs. The orange line is where they've actually gone. And so you've now seen around a 19% gap that's opened up between the two of them. Long story short, if you were a council, for example, that had $100 million worth of capex last time, you had 5 $20 million projects, you now need to cut one of those projects in its entirety to fund the cost escalation on the other 4. That is something that we're seeing repeated across councils. To get a little bit more granular, we've had a look at some of the more detailed figures as well. The likes of, if you want to build a bridge these days, it's costing 38% more than it did at the end of 2019. A road is 22% more. The likes of water supply systems and the like about 27% more. So again, that sort of cost escalation is requiring some very difficult conversations. That's sort of repeated and just trying to give you a few different ways of putting it in terms of when we look at where, or the percentage point gap that we would have had between what we previously might have forecast back last time the LTP was set and what we're seeing today in terms of cost escalation. So long story short, the finances are a lot more difficult. Now, in a sense, I expect that almost everyone around the table is on board with that and understands that. I do think it's something that probably the community doesn't as much, just because often we talk in annual inflation rates, but for councils, of course, that sort of those increases have been larger and they've also come through over sort of the planning cycle. Let's turn to the other fun conversation then, and that's interest rates. Now, in a sense, we went through a lot of last year talking about higher for longer, and I feel like we always come up with different terms about how to describe the interest rate situation. This is my current one. You have to choose your fighter. It's sort of like a bit of a PlayStation game. You can either choose the Reserve Bank or you can choose the financial markets. The Reserve Bank says that interest rates are not only going to stay higher for longer, but by gosh, they could even get higher still. Now, to be fair to them, their forecast last came out in November, but you can see that their forecasts over the last year or so have been fairly consistent with keeping their numbers at that higher elevated level. We heard a speech from the Reserve Bank a couple of weeks ago after GDP data came out, after inflation data came out, and everyone was looking for a bit of a signal. Is the Reserve Bank holding its line, or is it trying to sort of pitch towards moving where the markets are, and that's to interest rates being cut sooner rather than later? And in a sense, I don't think they gave too much of a steer either way, but it certainly wasn't setting the groundwork for any cuts in my view. The chief economist of the Reserve Bank, Paul Conway, made it pretty clear. He talked about a number of factors for why, if, in my mind, they're not keen, or they don't think there's all that much less inflationary pressure coming forward. They talked about how GDP was lower, which is true, but how inflation, of course, was the same. So effectively, you've now got higher inflation per GDP. The productive capacity of the economy was also smaller. So long story short, I don't think the Reserve Bank's sitting there and going, we're absolutely hell-bent on cutting interest rates anytime soon. They might not be as gung-ho as they were in November of putting it up, but they're also going, look, inflation's not done yet. We're not comfortable with it until it's well within the box and we can see it. The other option, of course, then is the markets, which are going, actually, we think there are some big cuts coming through. You can see here market pricing, and so the dates along the bottom are the sort of dates in the year. The dates along the top in the legend are the dates when the forecasts were published. So, for example, that dark blue line was published on the 15th of December, and that's where the markets thought things would be. By August 24, for example, they were expecting the official cash rate to be at 4.75%. The Reserve Bank thinks it will be above 5.5. So you've got a big divergence there in terms of the markets thinking that there's over 100 basis points of cuts in the next year or so. The Reserve Bank, who basically says there are none. Infometrics, we're probably a little bit more in the middle. We're currently forecasting the official cash rate to start to decline slowly but surely from August this year. We think by that point there'll be enough evidence behind the Reserve Bank to go, yes, inflation is not completely tackled yet, but because it takes 12 to 18 months to work, they're probably in enough of a position to start to move things back slowly. But don't expect your mortgage rates to go back to 2.2%. That was an anomaly rather than the norm. We're expecting things, probably a mortgage rate of between sort of 6, maybe 5.5% is the new normal in a few years' time. That's reflected quite clearly here in terms of we're still thinking it takes a while for some of those interest rates to come back. Probably most importantly on this chart is the green line. That's the effective mortgage rate line. So think of it as the average interest rate that households in Britain are being charged. You'll see that most of the heavy lifting has been done. We're almost at sort of that peak interest rate, but we're also not expecting it to decline much over the next couple of years. Households are still going to be paying a fair bit. That's still going to be a challenge on finances. We're not going to be able to spend like we did during the pandemic. Turning to population then briefly, and migration being the big, one of the other big chief economic concerns in the country at the moment, we've seen the number of arrivals massively skyrocket. We're currently adding the population of Taupō every 2 months in New Zealand, roughly at the moment. That is quite a bit, and funnily enough, we're not building a new Taupō every second month either. Or at least if we are, we were already needing to do that. We're not adding on top of that again. So you are seeing some of those trends coming forward. You'll note as well that that's been happening for sort of 6 months or so. It's not a flash in the pan. We haven't seen any real evidence yet that it's about to turn around. We're starting to get a bit of a view that it might be, maybe not turning around swiftly, but the impulse, just how rapid it will be, might shift at some point. The number of work visas on issue, the trend for them has declined about 8% by the end of last year compared to the peak at the start of last year. So not a huge shift, but a little bit more coming forward. That still means, though, that we have seen record high levels of net migration, and more importantly, we expect it takes a while for that net migration to fall back. Now, on one hand, that's good news for the economy. It means that there's more people to do stuff. Those labour market stretches that we had where you couldn't find talent, they've now come back and dissipated quite a bit. However, those additional people in New Zealand also require resources. They require food and they require rent and they require other things that everyone needs. And so there's a risk that there's additional demand into the economy, which could well make inflation harder to get down. That's a bit more localised at the moment. We know that about 2/3 or so, we expect that sort of between half and 2/3 of the incoming migrants are settling in Auckland. That's meant that Auckland rents have accelerated from being flat effectively year on year back at the end of 22. The end of last year, they were sort of sitting, rising around 9% per annum. So you saw a pretty sharp turnaround there. Now, I say all of that because that's an important national flow. For you guys here in Kaipara, this doesn't affect you quite as much. If you look at actually in terms of the ways that your population shifts, you'll see that green line there for net international migration is pretty low. I mean, even at the best of times, it barely got above 200, where you've had persistently more than 400 over the last couple of years come from internal migration. And so I think probably the focus here a little bit more is understanding how some of those wider population dynamics in, say, Auckland might affect how many people in Auckland already might well be continuing to look to shift to somewhere like Kaipara or even further into Northland. Because you'll see there that internal migration is a continued sort of trend that's come through, working from home opportunities, connectivity, all of that is making it more attractive, as well as that, of course, high house prices are true across the country. But if you're an Aucklander, you can still get sort of better bang for buck the further into Northland that you move, which is why we're, personally, and I know this is biased as a Northlander, I often get frustrated when I hear people talking about the Golden Triangle and not about the Golden Diamond, because they seem to miss the part up north where there's actually been some of the strongest population growth in recent times. That has sort of shifted around quite a bit. Now, I've just highlighted that we've seen very strong net migration into the country as a whole. That doesn't affect Kaipara as much, but like I said, it does affect other areas. And you can see that effectively for the entire Northland region, population growth in 2023 and 2022 was broadly pretty similar. But for Auckland went from having a net loss to a massive net gain, relatively speaking. And so again, I think it's one of those things not necessarily as important for you here and now, sort of every second of the day, but it does affect some of the broader trends of your neighbouring regions that will eventually affect you. Now on to some challenges for the year, because who doesn't love a good economics presentation with some doom and gloom? First up is the tourism recovery. Again, bit of good, bit of bad here. We've recovered to about 80% of international tourism inflows. That's very encouraging news. But you'll see as well that we've seen that recovery sort of stall. It's now plateauing over the last 6 months at around those levels. We've seen that Australian arrivals have been a touch weaker in recent times than we might have expected. We're still getting good levels of North Americans coming into the country, but also the Chinese market's still fairly weak. So we're looking at that and going, okay, tourism's still got a big part to play for New Zealand, but we still think it takes a few more years to get it back to normal. And so again, a bit of restraint there in terms of tourism spend as expected. The incoming government has got its work cut out for them, given that they've effectively got less money than they would otherwise like to have. You'll see here the likes of the corporate tax take down 8% year on year. That's despite the fact we've had the fastest population growth in about 70 years. Again, inflation's come through, people are earning more in wages. So the likes of PAYE tax is higher, but corporations are making less profits as those higher costs start to hit a lot more. Again, people aren't spending as much, so sales aren't going as well. And so again, revenue's not as good, costs higher, profits lower. That makes it more difficult. These numbers both give us a good idea around where the New Zealand economy in general is, but also says for the government that there is a lot of stuff that Finance Minister Nicola Willis will have to say no to this year. There's really in our view, outside of coalition commitments, and the likes of the tax cuts that have been promised to the electorate, there's very, very little we expect to see coming out from the government in terms of spending. There's just not that much available to them in opportunities. Internationally, we're also seeing some big challenges. For example, China's population has declined for the second year in a row, and you can see there that although it's not massive in terms of China, with 1.4 billion people losing 2 million sort of chump change, for New Zealand, of course, that's nearly half of our population if you did it all together. But it's the first time you've seen that population fall in the last 2 years since a big famine hit China back in the 60s. So it is just a shift where we're seeing the demographics move around. We know that around 15% of young people in China currently don't have a job. Of course, they're the sort of people that would often be buying a lot of products over time that you try and get in early to convince them to buy good New Zealand products, and they continue to do so with their higher incomes as they move into urban centres. They don't have a job, they don't have quite as much money. So it's sort of a little bit reflective of the more challenging Chinese economic environment that we're seeing. The population shift is coming through. Dairy prices are up, and we saw that coming through this morning, but still, I guess, a little bit more worried about the longer term effects of how fast does China grow. And if China was the thing that sort of kept a lot of economies moving into growth mode in the last sort of 5 years after or before the pandemic, what are we sort of looking to next? Because that is not likely to persist. We're also, of course, worried about what's happening in the likes of the Red Sea, rather. No. There we go. Freight prices have tripled from the end of last year. Now, to be fair, they were 11 times higher at the peak of the pandemic, so like 3 times as good relative to them. But also, I think the worry for New Zealand is not so much that shipping costs are higher. That's obviously bad news. It's also the fact that you might well find a whole bunch of shipping containers are in the wrong place, so exporters can't find them when they need to. Or that if you're a shipping company that is now having to delay your shipping schedule by 14 to 21 days, and you're looking at somewhere on the map to cut a visit from to make sure that you can try and get your ships back on track, that probably the easiest market is the one that's at the bottom of the South Pacific that only has 5 million people. We haven't seen huge amounts of that yet, but we did see a lot of that shipping disruption through the pandemic. And so, again, just a little bit worried about that. Then to some local trends. So first things first, just wanted to highlight what we're seeing in terms of the structure of the Kaipara economy, because I think that tells you a lot in terms of what stuff do you actually need to pay attention to. First things first is the likes of the primary sector, with nearly or just over 1 in every 4 people in the district being employed in the primary sector directly. You can see over 10%, sort of closer to 15 being employed in the likes of manufacturing, and then higher concentrations as well in the likes of construction. Those are sort of the 3 major employing areas, and so I'll go through a bit of an outlook for all of those. First things first is general economic growth, and you can see that Kaipara's is a little bit spikier, shall we say, than the national average. And that's because effectively where the likes of meat prices and dairy prices go does trend pretty well with where the Kaipara economy moves as well, given that strong primary focus. And so you can see that's sort of been up and down a bit. In more recent times, there was a drop for Kaipara in the year to 2020, sort of just as the pandemic was hitting. Coming through into 2021, you saw the New Zealand economy come down because of COVID, but Kaipara standing up in a pretty strong regard the last couple of years. I guess the too long don't read is that there's nothing particularly untoward in Kaipara. Sort of things are going fairly strongly, but also sort of not running away gangbusters. Different parts of the district are sort of going at different speeds, but in general, we're seeing that continued profile. On the primary sector front, again, some shifts over time in that. In terms of commodity prices, dairy has fallen back quite a bit over parts of 22 into 23, now starting to increase a little bit towards the end of last year and into this year. The likes of pork prices are higher, which is encouraging. The difficulty being is that with the cyclone effects, you've got a higher price multiplied by a lower volume, which still means lower outcomes in general. But the other one we're watching, and that I expect that you guys will be watching as well, is how the likes of the meats sector is going too, and you can see that sitting in a slightly lower position. Now, a nice index is all good and well for squiggly lines. Let's put that into a little bit more dollar context. At the moment, we're expecting that Kaipara makes about $55 million less from the dairy payout this season that we're sort of most of the way through relative to the season or the peak season you saw in 2022 when prices were a fair bit higher. So that's definitely a lot more challenging, but equally sort of more on par with what you saw in 2019. The difficulty is that input costs have increased so much more on farm. So I said before that the likes of consumer inflation peaked at 7.3%, the likes of on-farm inflation peaked at 15% per annum. So again, those on-farm costs are coming forward a lot more, and so you're getting lower revenue just as you're getting higher costs. So primary is definitely under the gun. Same if we look at the likes of the beef price, lowest in about 3 years at the moment. Now, to be fair, the only good news here a little bit is at least you don't have a bigger focus on the likes of sheep and lamb, because lamb prices are currently the lowest they've been in over 7 years and continuing to decline. Part of that is that we're seeing a lot more volume coming on board from the likes of Australia. They're having much drier conditions. They're needing to kill off more of their animals and put them into market. That's flooding the market. Opposite of Coomera, there's not a lot of Coomera at the moment, therefore price goes up. If there's a lot of beef in the market at the moment, price goes down, especially when you don't have that strong demand coming from the rest of the world, the likes of China as well. More encouraging news though, so okay, the primary sector's in a challenging position. We're still seeing some solid levels of spending growth coming through in Kaipara, up 3.9% over the last year in terms of card spend. Now, of course, that's below the inflation rate of 4.7% over the last year, so that sort of implies that households are spending more to pay for cost increases rather than necessarily buying a lot more physical items out of store. You'll also note as well that that line sort of curved off over 2023 and sort of has flattened a bit more. So Kaipara had been on a much stronger spending tier, particularly as Mangawhai was growing, but there does seem to be that sort of general plateauing as households are having to be a bit more cautious with their cash. Last two bits, housing market first, it is rebounding, it's starting to increase, but we don't think it's going to sort of tear away. You can see in terms of where Kaipara's house prices are sitting in the September quarter, and we're just updating our figures at the moment for December. They're up 0.2% year on year compared to the rest of the country, which was down a few percentage points. And you can sort of see that sort of plateaued out just over 800k and starting to increase a little bit more. Now, to be fair, we're not expecting a huge amount of massive house price growth. We think it will tick over slightly, but at the moment, the likes of those high interest rates are still a real challenge for households. And as well as that, we're seeing higher building costs and similar come forward as well. Just on the affordability front across the country, the average household in New Zealand is having to spend around 50% of its household income at the moment, if it's a first home buyer, to service their first year mortgage. So you can sort of see that in our minds we look and go, sure, house prices could massively go higher, but if interest rates are still high, I just don't know what sort of household that. So there is a little bit of constraint there where people are effectively going, look, I would love to pay that much for your house. I cannot get enough money from the bank to make that work because they won't approve me for anything that high. So either make sure the price is a bit more viable or there's just no way I can participate in the market. And we are seeing that a bit more. In terms of construction costs, and this is one of the limitations that's starting to come through, again, we're starting to move into a better place where we're not seeing as much cost escalation coming forward in construction. It's still sort of sitting around 5% on an annual basis. But again, it's sitting at about 44% relative to pre-pandemic. Now, if you're someone who's wanting to do a bit more construction, you're now sitting at the fact that you've got interest rates at the highest they've been for a while. You're having to pay 44% more for building the house. And also, your house price is still probably about 10% or so lower than when it was at its peak. And so you're making less money than you thought you'd make. You're spending more to build it and you're struggling to get finance. That's just a sort of difficult proposition to get everyone over the line with. That means that at the moment that the number of residential consents for Kaipara District are sitting at the lowest that they've been since around 2013. Now, to be fair, you've had big levels of building in prior years. So you could look at that and go, well, it's the lowest in 2013. That's awful. Or you can go, you sort of have had a big level of building and that really your construction sector is probably still trying to figure out how it builds all of that to the same level over time. And so a little bit of a lull after some big highs I wouldn't be overly concerned about. We are seeing that trend across the country where construction levels are pulling back over time. The question we're trying to figure out is where level of support coming forward? Do you see more levels of investment, for example, coming from government? We'd like to see that, but again, government's pretty constrained cash flow wise, so there's a bit of difficulty. Commercially as well, you've seen that sort of coming back after some of the big developments, particularly in Central, but the levels that you're seeing at the moment still sort of sitting close to 20 million over the last year. That's sort of, I'd call that a fairly stable level of investment that's coming forward, particularly good when you think that businesses, again, cash strapped, a little bit more constrained on their spending, but still, in a sense, willing to invest at normal level is somewhat encouraging. Last thing is the jobs market. Now, we get more jobs market data out today at 10:45, but I'll take you through what we're already knowing. And that's that we've still seen fairly healthy levels of jobs growth in recent times. That's certainly encouraging, but one thing that we are starting to question is, well, how are we continuing to get such high jobs growth? When we're talking to businesses who are saying, you know, they're struggling to get sales, yet they're somehow still employing people or growing their employment at that same strong level that they had before. We're just sort of trying to work that one out a little bit. In Kaipara as well, though, you're seeing some of the strongest growth in employment, and obviously I can't spell that, should be third fastest, not third fastest. Excel doesn't let you spell check, and it often brings me into disrepute. Ignore that one. Good with the numbers, not so good with the spelling. That's fine. I can speak well enough, sort of. You can see that continued level of jobs growth coming through in the district. Like I said, that is the third fastest of all 66 local council areas over the last year. That's still encouraging. The national average is sort of sitting closer to 3%. So the fact you've got 8.5 really does highlight that continued sort of push. Also encouraging to see that Māori employment outcomes are quite strong in the area. They're strong across the country, so that's encouraging news. But also, if you look at the likes of Māori and Kaipara, you're seeing that growth rate of sort of 6% over the year to March 2023. Total Kaipara had slipped back a bit before it's sort of grown a bit since then. But I think important to sort of highlight that continued trend where there are more, particularly young Māori that are getting into work. Where are they getting jobs in Kaipara? Well, funnily enough, not the primary sector. Given the pressures on the sector, we've actually seen a fall in employment there. That was both a contribution from not being able to find as many workers in some areas, and then with those lower revenues, it's made it more difficult. But you have seen with that sort of continued level of spending going on in the district, a high level of employment coming through in retail trade, also the likes of manufacturing. There's still a fair number of jobs going through there. And then the likes of health and education. So some of those stable bits where particularly as your population grows, you're also continuing to see more developments in those areas. The question, though, that we're trying to figure out, and this goes to the wider question around migration, it also goes to employment, is that generally speaking, we would think that at the moment there would be fewer people coming into the country because of this trend. And that's that there are fewer jobs being advertised. And we think this is probably the big one for the jobs market this year, is that we've seen now the number of jobs advertised in the market down about 12% below pre-pandemic levels. They're about 25% lower than a year ago. And that means that over time, we're going to see employment push up, not necessarily because lots of people get fired, but because there are a lot more people that are looking for work, just as there are fewer jobs becoming available. We saw, for example, mid last year, there was around 25,000 more people that had come into the country and were looking for work from migration. There were 10,000 Kiwis who previously they didn't want a job, they weren't looking for a job, they wouldn't take a job. Then all of a sudden inflation hit and was quite hard for them, and also wages were higher. And so if you're say a two-person household and only one person was working, you were going, well, look, we need to figure out how to pay for the grocery bill. Maybe I'll go and get a part-time job because inflation's gone up. Oh, and it's worth more to me now because that wage has increased as well. We'll see continued levels of that through this year, but just at a time when businesses are putting out fewer and fewer jobs because they're a bit more constrained. So we do think the unemployment rate today will lift. Some expectations are sort of up to 4.3. We're sort of picking 4.1 at the moment. The big thing there, though, is that that's not necessarily job losses. It's more people looking for work just as there are fewer jobs available. That was a fair amount of information to take you through in a very limited amount of time. I'll turn the fire hose off for the second, but more than happy to go through questions now.
Ash, would you like to ask a question?
Thank you, Mr. Mayor. I had a long question, but I'll split it into two.
Okay.
To make it easier. So you talked about inflation around 5% going around in the country. but you had a very high figure for the overseas inflation, domestic. So I get the OCR and all related probably to domestic inflation, not. But if you look at the overseas inflation, which is the major component is oil, it is percolated everywhere in domestic market, whether it's construction or all. So we are looking at that portion, if I get it right, when you're talking about 42.5% inflation in construction industry, because construction industry, you have talked about 5% inflation.
Yes.
In the trend.
The 5% was year on year. The 40-odd% was relative to 2019 levels. So it sort of depends on if we're talking just the last year's worth of inflation or if we're talking the last sort of 4 or 5 years worth of inflation built up over time.
Oh, for the construction, my first question is why we are having 42% as a parameter? Why not 5%? Because that's real. 400 companies have been bankrupted in construction. You know that, right? Okay, so that's first one.
I'll take both of them and see if I can combine them. But yep,
Just go on.
For that one, I mean, I think part of that is because we've tried to do so much construction across the country that everyone wants to do a bunch of work and there just hasn't been the same amount of resource. So on some areas, you've seen that the likes of material cost inflation has gone up quite a bit. So particularly the likes of bitumen costs or whatever over time. But also a lot of the time it's around the likes of either the skills or the ability to do stuff. And so what we've seen a lot in the last couple of years is that because everyone's wanted to build, every council, every government department has wanted to build, there's sort of been enough to do 5 projects, there's 15 on the cards. Now, if I'm a company and I get told there are 3 projects going, and I say, look, I can only do 1, you can either sit there as an organisation and say, oh, well, I lost out, sucks to be me, I'll sort of sit back and just take it. Or you go, no, I want my project to happen, so I'll pay over the odds, because I want to make sure that mine happens. Now, that doesn't necessarily happen as simply or as simplistically as I put it there, but you do see that sort of cost bidding up over time. Also, when you then have delays with projects, the likes of City Rail Link's a good example where it's taken them longer, it's costing the subcontractors more, the subcontractors pass it on because no one else will do the work and so on and so forth. So a lot of that is coming through. The other point I'd make, given that the likes of fuel prices, for example, have fallen back, we don't generally see a lot of falls in prices in New Zealand or in most advanced economies. Most things sort of, once they get to a level, they sort of sit there unless they're seasonal, like tomato prices. So a lot of that construction inflation is almost locked in until such a time as you see there's so little work on the market that everyone is so keen to bid for that work that they'll sort of undercut themselves. But again, they've got to keep their business operations going. So there's a little bit of how much do I cut to make sure I get a job, but I need to still make enough money to keep myself going and have enough cash flow. That seems to be a bit more of the balance.
So sorry, just a corollary to that. So you also talked about migrations. The net migration is 0, international. If you look at your figures, the international migration is 0. So we are not getting migrations which we want. And that shows in the construction sector, they show everywhere. And that's the reason the jobs don't get done in this country, because we don't have enough people to do it. So the projects get delayed, the inflation factors 42% in, and the 1 million becomes 1.5 million or 1.7 million. So this is like a paradox, which we are facing in this country. So you mentioned freight cost is 3 times more. So I guess the oil and this whole thing, which is percolated. So what's the answer for Kaipara? Because Kaipara is not growing because of many reasons. People are not there, regardless of the fact how much migration is there. The construction, the things don't have because we don't have people to do the thing. So what's the solution?
Are you talking in terms of construction outputs or in terms of...
I'm talking about roads, I'm talking about everything in Kaipara. Yeah, thank you.
But sorry, construction or general economy?
No, I'm talking about specifically building whatever the projects are, mostly roads and, bridges and all. It is not happening because we don't have the people. The costs are escalating. The ratepayers struggle for that. So, is there a solution?
There's no particularly easy one. I do think that during the pandemic, at the start of the pandemic, there was what I thought was some quite good work happening in Northland in general, where the roading controlling authorities, including yourselves and some of the contractors and MSD and similar, came together to try and better phase some of that investment that was going on. Because one of the other troubles that we often find is not only do you have those cost escalations, but you also have projects that either get delayed or take so much longer to finish that it then sort of has a knock-on effect to the next one and so on and so forth. So I think some of that better sequencing with some of the providers has been useful. I've definitely heard that feedback around the country that sort of phasing and sequencing is important. I think it also comes back though to a point, particularly on the cost escalation, that one of the very unfortunate, in a sense, recommendations I would give to you is that you will have to be a lot more strict with yourselves over what happens and what doesn't, and what you set the priorities as. At the moment, across the country, for almost every council, for every government department, for every household, people are having to make tough decisions around what gets above the line in terms of spending and what doesn't. And I think the big thing there is setting a pretty straight set of priorities of sort of what are the must-haves. I'll use a Wellington example that we've used recently, and I say this as a private citizen rather than anything else to make sure I don't get in too much trouble. Obviously, we've got some big issues with our water pipes at the moment. There was also a consideration to buy the land under a cinema and to lease that back to the cinema company. If I had a house and my house was flooding in the bathroom, I would not install a home theatre system while it was happening. I would put the money into the failing bathroom and make sure that it was fixed up. So to me, I go, what are the absolute sort of life and deaths that have to happen? Otherwise, you have catastrophic failures. That means that some of the nice to haves have to drop out. There is not enough money, there is not enough resource, there is not enough people to do everything for everyone. And that means that prioritising and being pretty straight up with the community that either you want to pay the big cost escalations or let's set a pretty strict level of priorities. What are the top 5 projects that must happen that we can actually reasonably achieve? And then everything else below the line, we'll still get to if we can. But I think previously there's been a lot, and this is across the country, where people have added in more and more projects over time that just haven't been able to be funded. We know that for water infrastructure, for example, about 20% of the investment made every year is not actually spent. And that means I do think that prioritisation has to be a lot clearer.
Thank you so much, Brad, and thanks for the nice presentation. Yeah.
Any further questions, Mike?
Thank you, Mr. Mayor. Thank you, Brad. Wonderful insight. Couple of observations, probably, and then into 2 more questions. But it's interesting, 22% more expensive to build a road over the past, how many years?
That was since 2019. So what's that? 4 years now.
So we're facing here 42.5%.
For your roads.
Right, so
got a lot of roads and a sort of fairly rural base as well.
Yeah, absolutely. So I mean that's a big impact as we're finding. But it is something when you look at some of your figures on Kaipara is that actually your construction. You look at anecdotally, just even on Facebook, local Facebook, in the last month, the number of builders that have been saying, "Oh, I've had a job deferred," or I've got capacity now, and things like that. So it is starting to happen here that people are starting to look for work. The 2 quick questions are: the 2% inflation target from the Reserve Bank, is that realistic in this day and age, in your opinion? And on the net migration, to me, the big thing that's hidden in there is the outflow. And how do you see the outflow? I'm not worried about, because we can turn on taps for getting people in.
It's hard to hold people back though, right?
Right, absolutely right.
The inflation one, the very briefest of history, when the 2% inflation target was set, that was effectively set because what you really want is 0% inflation, all else being equal to 0% inflation. It's just that we're not 100% sure that we measure inflation all that great all the time. We think we sometimes we sometimes overestimate that. Often people, if I asked you, for example, what's gone up in price in your lives, almost everyone would be able to give me a pretty strong list. You probably wouldn't be able to give me as good of a list of what has gone down in price because you just don't notice it as much. That's sort of like a little bit of a win, whereas every single increase is a little bit of a loss that you feel a bit more acutely. So the 2% was sort of designed so that there's a little bit of overestimation in the system that we can cope with a little bit on the inflation front. Do I think it's possible? Yes, and I think it's probably important to stick broadly with. There was a bit of consultation done by the Reserve Bank last year where they asked this question around, where should the level sit? And, you know, there was a question over should it be higher? India, for example, targets 4. Now, they've also got a very different economy from us, so let's stick away from that. But one of the things I think, let's not be as wedded to 2% directly. We've got a range of 1 to 3 with a midpoint of 2. That means that over the sort of medium term, you want to get back to 2 and you want to have your forecast getting back to 2. But if you had, say, 1.5 in 1 year and then 2.5 in the next, I wouldn't call either of those failures. I would call 4% a failure and I would call 7% a failure. And so I think it's, in my view, sort of getting back to those bands. And the big one, I think, for the Reserve Bank at the moment is because they're going from a massive losing point at 7 back to where they want to get to. They want to get to 2 to sort of tell everyone, look, we can and we will get to 2 sort of no matter what. I do think there is the potential for higher trend inflation over the next decade for 2 brief reasons. The first being that after the GFC, China was such a big powerhouse, they were just producing like no tomorrow, and they were effectively exporting disinflation or deflation in a lot of areas because you had such cheap stuff coming out of there. That's now come a bit more to an end. The other one is climate change, where over time that's likely to bring less cost, but that's sort of decades away. In the short term, the transition will cost more in terms of energy and whatever else. So I think that's probably where we would, or I could see a reasonable scenario where you had trend inflation closer to maybe 3% at a point, but I think also for the Reserve Bank, where their entire credibility is staked on their chance of getting inflation back to there, they sort of have to hit it. On your second one around departures, yeah, it's a fair point. One of the reasons I didn't put the departures line in this time is because the very last month, the departures numbers are a bit cooked. Even Stats have said they don't think that's what their model's giving them, but isn't strictly correct. Excluding that last one, though, you have seen a rising level of New Zealand departures heading overseas. Now, some of that is young people going over to the for the OE and similar, particularly to the UK, where they can get a 3-year visa. However, we also know that about half of them are leaving to Australia, and that a lot of them are taking children. Now, you don't generally take children on OE, you take children if you're moving permanently. So that does seem to be a bit of a shift. I think the two things there, or the major thing there, and I might well have said this to the Northern Advocate at one point because they asked a similar question, you can't do a lot. You cannot physically restrain New Zealanders who want to leave, right? And I think in some ways there's a really good opportunity for them. They go overseas, they can get some different skills. Hey, they might be able to get a bit of money to start them off or whatever it might be. The big thing, I think, is how do you attract them back? How do you tell them that this is a great place to live? Because we know when we talk to New Zealanders who are overseas or have moved back, they love coming back to New Zealand if there's good opportunities. Often they love it because they can come back and they can find some free babysitting in the likes of mum and dad, and that's a big one. But if they can't find a house to live in, if they can't find a job that pays them reasonably enough, then it's very, very hard for them to make that shift back home. So I think the focus, in a sense, should be a little bit less why they're leaving and a little bit more how do you attract them back? Because I am worried that we've probably lost that bit. I don't think there's as a convincing argument, especially as a younger Kiwi. I look at my friends and I go, what would I tell them to say you've got to come back to New Zealand? I'm not saying it's completely doom and gloom. There's still, we're still seeing huge amounts of population growth. There's a lot of people in New Zealand. We're not down and out, but I do think that has to be a little bit more of a focus. Is what is the story we're telling people? What's the narrative that we're running? And what are you doing about supporting those sort of outcomes in terms of continued house building in different areas, in terms of having that good infrastructure, in terms of jobs development and similar over time? That's bigger to me than stopping them leave is bringing them back.
Thank you. Councillor Vincent.
Well, thank you, Mr. Mayor. Yeah, it's interesting. You may or may not be aware, Brad, that there is ongoing friction between the two main settlements, Wangawhai and Dargawal, as to which one is subsidising the other.
I'm glad that this happens in every council across the country. I mean, again, in Whanganui, there was always that talk of the rurals and the urbans and bits and pieces. So, yeah.
But actually, what appears from your figures that the Kaipara's economy is actually underpinned by the rural sector, which doesn't get to play in that other game. So my question is, where'd you get your shirt? That's really nice.
No, the Three Wise Men store in Wellington, but certainly not from the primary sector as much. I think it's one of those things where you do see over time, I won't now, but if you look at that composition, you have been seeing a shift away from the primary sector over time, and that's only because it's so big at the moment that sort of everything is still dwarfed by it. We are seeing, in the Kaipara numbers, we are seeing some roles that are becoming we're seeing more growth in, the likes of professional services. services. And I think probably a big opportunity is obviously around here where we are at the moment, there's a lot of people that have been moving in, often from Auckland and similar. And that working from home is a big advantage. The thing then is to convert that into spending at home as well, rather than spending back in Auckland when they go to the office or whatever it might be. And I think that that's a shift that we're seeing over time that, I mean, having driven through this morning, the fact that, you know, you do have some of those developments and similar happening in Central is a bigger thing than, in a sense, I realised at the time as well, because you are then able to sort of track some of that spending here a lot more, and then think about, again, how you make some of those changes over time. We're seeing things in other parts of the country as well, where that sort of work from home trend is coming forward, and it's requiring a different level of resourcing. Previously, right, if you didn't have those, if you had someone who might live here but still commute into the city quite regularly, you don't need a lot of cafes or bars or restaurants and those sorts of things, because people use them in the city, and they use, or they used to use areas like this a little bit more as a dormitory. You know, they sleep and shower and then they drive off. We are seeing more people that are sticking around, and that's requiring those sort of a bit of a shift in services. So I'm convinced that that's still happening. I think both are right, though. You've got to focus on that development of the people who are sticking around, but you've also got to realise that the primary sector is a pretty important part. I mean, I often think that a lot of the time, you know, there's talk around, you know, farmers who are doing it tough because of high cost increases, at the same time as, you know, farmers are ripping off the tax system because they're buying, you know, kiddie pools for their family or whatever. Both are probably true. To be absolutely genuine, I think that both are probably true. And I think it's a bit more of figuring out how do you grow the pie rather than who fights over how much you're cutting off each part of it, sort of thing.
Cool. Thank you.
A question from me, Brad. Very fascinates me with the net migration thing, and you said that half to 2/3 is settling in Auckland. So we must get a spin-off from that, and Far North Council looks like they're getting a lot more than we are, which is fascinating. Is that driven by their house prices up there more than anything?
To a degree. I think also what you're seeing, we see this in other parts of the country, is it's sort of like a little bit of a staggered effect. So Kaipara will get that sort of spillover from Auckland, but not as immediately. It'll come in a few years' time, in a sense, or sort of in a year or two after that, as almost you have a displacement of people. So, you know, a bunch of people come into Auckland, they're pushing up the rents. People who were previously there on the lower rents now can't afford that. They move a little bit further out of Auckland Central, say, into some of the suburbs. And then again, those people who were previously there continue to shift out. Seeing the same sort of thing in Wellington, where sort of from Wellington City, you see some of that growth that's been radiating out and is now sort of more concentrated around the likes of the Hutt and Kapiti and up into Levin. The same is happening in the likes of Christchurch, where you're seeing a lot of growth that's now happening in likes of Rolleston or Rangiora and those sorts of areas, rather than Christchurch City purely. I think that's probably the same here in terms of Kaipara's had some very strong growth in previous times. It's just mathematically harder to keep that high growth rate on top of previously high growth rates. Far North hasn't had as much and is now sort of getting that push through. So it's probably more people that are moving out of Whangarei, I'd say, into the Far North than sort of Aucklanders skipping over everything to get to the Far North. There will be some of that, but I think it's sort of more of a shades of grey. Again, similar sorts of things, if you look into the likes of the Waikato, talking to some people, northern Waikato is quite difficult at the moment for further development. They don't have as much infrastructure, a lot more capacity around the likes of Cambridge and Waipa, or even down into South Waikato in terms of Tokoroa. So it does seem to be a little bit of a the ripple effects are moving forward, and I suspect that's what's happening in Kaipara as well.
Councillor Lambeth.
Yeah, thanks for me. Just going back to that, us exporting our young families. I've found sort of a lot of them are sparkies, mechanics and the like, going either to the mines in Australia or to, they're fully qualified. But there's also that other dynamic, and I'll use a personal example. We're sort of, over the last 7 years, sponsored a young fellow going through our business, and he actually ended up graduating with a master's in architecture. He's got a $120,000 loan, a student loan. He's got that down the last 2 years down to 100,000, but he can't see any future for him here in New Zealand. He's going to get registered as an architect shortly. And he's got this, he can't go and borrow anything from the banks because it's a debt. So they're going overseas. We're exporting our talent. And is that a dynamic which is affecting us dramatically?
it's probably not affecting us as much right here, right now, but it has the implication to a lot further down the line, particularly because what we're seeing as well, because it's our young talent that we're losing. We know that New Zealand's already got an ageing population, right? Because people are living longer and similar. The other challenge, though, is that, and we're already starting to see this in some parts of New Zealand, where the ageing population, eventually they die. And in terms of population, that's a loss from the population. Now, normally you have lots of people that are also born every year, which add to the population. When you lose your childbearing age population, some of these young Sparkies and similar, you don't get that added population at some point in the next 10 years or so. And so what we've always talked about for a long time in demographics around natural increase, which is the level of births minus deaths. Now, we talk about it as natural increase because normally it has been. Now we're moving into a position where probably in about 30 years' time, nationally, we'll be seeing natural decrease, or there'll be more dead than are born every year. And I think sort of locally, that's one of the issues that will come through. The West Coast saw this a couple of years back when they lost a bunch of young people because they're a much smaller economy. We could see it very clearly in the population. The next year, the birth rate, the birth rate was normal, it's just the birth numbers were quite a bit lower because they didn't have that population. One thing I would say, though, in terms of going overseas, I mean, if you look at the mines, for example, just no one can compete with that sort of money. But it's one of those things, I really don't think that's the sort of thing you do for your entire life. The lifestyle is not that option. So, you know, look, I've had family members before who've gone over and done 5-6 years and brought a huge amount of cash back in that, and sort of good on them. I have heard from a friend recently who's gone from nursing in New Zealand to nursing in Australia, sold the idea that, you know, Australia is utopia for the health sector and similar, and she just can't, she's really shocked at how bad their system is. And so I'm not saying that, you know, we're all milk and rainbows and, you know, all this talk of the grass is greener is completely false. But I do think there is a little bit of people will leave naturally because they always think there's a better opportunity. It's about coming back. For Australia, for example, we know that the average person earns about $200 more a week in Australia than they do in New Zealand. But again, we also know that there are some costs depending on where you are and depending on your job and everything else. That means that you're also paying a lot more. So I think probably, again, it comes back to the point before where if we are losing people, and agree we are, it's, you know, what's the thing that, for example, you know, using your example of the architect, you know, why are they seeing more of an opportunity wherever they're going? What are they seeing? And then you go, okay, they've got this vision over here of what it looks like. They can't see that vision here in New Zealand or Kaipara. What needs to change? Is it A, is it B, is it C? And then start to craft some more of that, I think, is probably what we need to look a bit more at. And part of that requires a bit more conversation. I think a lot of time, particularly in terms of, you know, area building and sort of place-based decision making, we often think a lot in terms of some of the harder infrastructure, and I get that, but I don't think we probably go out to the community as much in terms of some of that forward stuff. You know, yes, there's a little bit of a conversation over the next 3 to 10 years of the LTP, which is really only the next 3 years. In many respects, it's then sort of, actually, what do you want this place to be 30 years' time, and how do you craft that over time? Is it around the mix of shops? Is it around social opportunities? What does it have to look like?
Thank you. A question up there from Councillor Erin Wilson-Collins.
Thank you. Yeah. Kia ora, Brad. Thanks very much for your presentation. My question has to do with more of the micro level of the district. So the figures that you've presented there, especially in regards to employment and things, all look really good district wide. But I've got sort of anecdotal stories being told to me and heard of places that are really struggling to employ and fill jobs, that there are people that are being laid off in certain areas of the district. I guess my question is there a way to balance the district-wide figures with not forgetting about certain areas that may be struggling or may not, could one part of the district, maybe if it's performing really well, override those other parts of the district that might not be? And how do we make sure we don't lose that perspective?
Yep, no, totally a fair point. So we do have estimates of lower level employment, so at what we call a statistical area 2. The issue with those is that we get some very fast data that comes out of government using tax filings, for example, that only sits at a TLA level. So we can't go below that. It means that in a sense, it's a little bit harder to validate what some of those trends might be in terms of sort of in the last month or two. But we do have access to information, and I'll make sure that council officers do as well around some of those sub-level areas, so that we can at least examine those trends over time in terms of, are you seeing stronger jobs growth, say, in Mangawhai compared to Dargaville? And if so, what's driving that? Probably professional services and similar, but at least we can dig into that. So we do have a bit more of that information. I think the difficulty we often sometimes find is that the more you dig into, this is not sort of saying not to do it, the more that you dig into some of those things, sometimes you lose the wood for the trees. And so it might well be that it's better to compare some of those broader trends for smaller areas, digging in every now and then to figure out what the big drivers are, rather than sort of always having particularly detailed reporting on every area, because you sort of lose some of that broader macro stuff. But absolutely take the point that the local level information, or more localised information, is important, and I'll follow up with council staff around that.
Thank you, Brad. Look, I'm going to wind it up because of time.
Yes, apologies for going quite a bit over.
Hey, look, it's fascinating. There's a heap more questions I'd like to ask you, which I'll probably convey to you by email at some point. But
Please.
And I'd like to thank you very much for driving up from Auckland this morning. I know that's a mission at times.
I don't know, it was quite a nice drive with that new highway that's come in. It just, as long as there can be more investment coming through the local roads as well.
Get it through to the end of the dome, we'll get you here even quicker. Thank you very much.
Thank you.
Thank you, Brad.
Opera transportation activity briefing, November and December. So we've got Calvin Thomas, Bernard Pedersen, and we've got Dawn Spence online. Is that correct?
I think Dawn is joining for the next item, but she's there anyway. Morning.
Morning.
So we will take the report as read. We have got a bit of a presentation, but I think I'll cover off some of the questions we've received first. Some of them received on Monday and then some this morning. So from Councillor Vincent, we had a request regarding resilience improvements project of red risk not being done on the Brindouans bypass route. So that site in particular was scheduled for design only this year anyway. There's not sufficient budget within the resilience project to do that site project. So it's showing as red because it's only going to be the design component done this year.
Not done this year.
It was originally, if budget allowed, one of the projects that would be done in full. As the budget has, the other projects have come in, that one has been the low priority, so it will only be design only this year. So the design, yeah.
So you're expecting that there'll be the design
Yep.
completed, but not the construction?
Yes. The other thing, and it kind of relates to the KDC Transport Capital Program from Councillor Howard around the orange risk and the 13.5 million of the 20. So what we generally do as we move into the second half of the year is split that orange risk into two categories, one being the value that is going to be delivered and the value that is likely to carry forward. Normally it sits at about an 80-20, 80% of it being delivered. But Greg's working on that for the January report, so that will come through there. In terms of the October financial figures versus the December report, we're working with KDC Financing about getting the up-to-date figures through. There was a break in the linkage of financial figures, but the risk assessments per project are done on a monthly basis. So that risk assessment is as at end of December. So yeah.
I mean, the point there really is that we've all got enough concerns about all sorts of stuff that is not going to be completed.
Yep.
And have we over anticipated our ability to deliver on projects that have been carried out already for prior years? So we've really got to see that minimise.
Yeah. So one of the things that Greg will also be adding in as we get that transparency, and we do this as we move to the end of towards the end of the financial year, is the reason for non-completion. So there is a combination of capacity, like you've said, but there is also like the likes of the one that we just talked about, where the wider budget for that activity has been, which means that one project has to be deferred. So that as we move into this part, the second half of the financial year, that transparency grows and that reporting as we get more certainty in the program and the tenders are coming in and those.
Acknowledging, of course, that by the time we get that update based on January 31, we're going to have no more than 3 months left of the year.
Yeah.
Months.
So traffic management, there was a question about the cones affecting, the number of cones affecting the cost. Generally, the traffic management costs are based on the site type setup. I think there is a lot of discussion around at the moment about appropriateness and cost of traffic management. Earlier in 2023, there was the signal change from the prescriptive Compton traffic management to a risk-based approach of traffic management, which is designed about appropriateness of setups as opposed to this is the site and this is the number of cones you need to have. There is obviously some hesitancy from the industry in terms of where the balance of risk-based versus pulling back on traffic management sits because of liability and PCBU responsibilities. Although one thing we have highlighted recently is the changes made about 3 years ago to the traffic management categories have had an impact on our lower volume roads. So historically, traffic management requirements were based on traffic volumes. And about 2 to 3 years ago, they changed to categories, which is based on the speed limit. What that has meant is our low volume traffic roads, being a lot of our unsealed roads, have 100k speed limits, which put them into a higher category road. We're under the risk-based approach, we can now address that and go, actually, we can use the previous categorization, say they're low volume, and have a lower level of traffic management. And that's something we're transitioning with the industry at the moment, because there are definitely certain situations where the time and risk exposure of setting up the traffic management is actually greater than the risk you're trying to protect of doing the job. And so those are the things trying to,
I guess
the industry has swung too far.
Yeah.
I'm regularly reminded of, because I live now at Whakapuria and get to see the job that's getting underway with the reconstruction there. And the number of cones seem to go hundreds of kilometres further than they need to, and including 2 side roads, which are, and even the tar sealed road, I would rate at 80 kilometres an hour normal travel speed rather than 100. So that for practical purposes, vehicles are not going, the few vehicles that do go, that they're not going that fast. But we've got several extra traffic management people, quite apart from the number of cones that seem to. It just seems quite over. I can see how the cost is just ballooning.
And it's definitely something that as an industry has, in a lot of cases, swung too far to the point that the risk you're trying to mitigate has been increased by the fact that you're doing those, and then there's costs that are associated with that as well. And it's how, as an industry, this could go back, noting that the primary ones who take the risk, KDC obviously has some risk as the primary PCBU, but the contractors who are setting up the sites have to have their own risk appetite when they're putting things forward. So it's a balance that we're working through at the moment. In saying that, the wider Northland industry, Fulton Hogan, are one of the trials for the State Highway maintenance contract for the new risk-based approach that Waka Kotahi are funding. And they're working through that, and we're working closely with Waka Kotahi's traffic management team to try and understand how those learnings, improvements can be brought across.
Sure. Thanks, Howard.
Thank you, Mr. Mayor. Cohen, can we just understand a little bit more, you know, without dwelling on this too much? I mean, it's very simple. Our concern is that traffic management is one of these things that has probably disproportionately contributed to this 42.5% increase in roading over across the board. So who makes these rules about how many cones you've got to have per 10 metres or whatever? I mean, and I think that all of us who've got any experience looking overseas or anything like that, you know, we just overblow it, and I appreciate that you've just acknowledged that. You know, you've got a cone every 2 metres, whereas a blind man could see that there is only a need for one every 5 or 10 metres.
So through the chair, up until, I think it was April or May last year, the rules were dictated by the National Copton Code of Practice for Temporary Traffic Management.
NZTA.
And that is driven by NZTA. They contributed to it, but it's a national code of practice. That is very prescriptive in terms of if you're doing a shoulder closure, this is what setup you need. But mid last year, they've introduced the risk-based approach to temporary traffic management. However, the industry as a whole is still getting their heads around what that means, and are falling back to Copton as the only formal guidance. So it's about pushing the industry to take that more holistic approach, and that's something that we're working quite hard, not just in Northland, but right across the industry to try and get that across. In terms of council's role in it, up until recently, council's role as a road controlling authority was twofold. That was firstly to look for conflicts between work sites and make sure that the work sites in the rating corridor were appropriately managed. And the second one was to check for compliance against Copton. Now it's moving more into the first and making sure there's conflicts and providing advice on whether we believe the risk-based approach is appropriate or not. And that is more so about council jobs. It is a transition period at the moment that's pretty messy because no one wants to be the first PCBU that undercooks their traffic management and has an incident. And that's the issue we're working through at the moment. Yeah.
Councillor Nair.
Thank you, Mr. Mayor. I have a question more on operations. So we have a lot of money coming to us under Emergency Response Fund, which was 100% funded.
Yep.
And I see some of the projects are not being done in time. So who is going to foot the bill when they are delayed and the cost escalation is 40%? Will the council has to bear the cost?
So
Phase 3 one, yeah.
through the chair, the phase 3 were never 100% funded, just to clarify.
100% funded.
Through the chair, phase 1 being response recovery and phase 2 being the under 100,000 were the ones covered by 100%. Those works are all on track, and we've added some further works in phase 2.5 that have come out that will be done by the end of the year. The phase 3 works, we're working through funding approvals and design at the moment with Waka Kotahi. Those works are funded at, we believe at this stage, a minimum of normal FAR plus 20%, which is the emergency works funding, which would be on Kaipara's 82%. Those at the moment, the most critical of those have gone out for design tender, which is in line with the program that we've agreed with Waka Kotahi. The reason for putting those to the end was so we could take advantage of the 100% funding and make sure we got as much of that done as possible. That program has always, right from the outset, been anticipated to be a 2 to 3 year program that would span out to 2024, up to the 24-27 period. That the volume of works in that program is not achievable either physically or financially within 1 or 2 financial years. And that's been the way it is. So in the future LTP, as part of emergency works, we've identified the volume of works that needs to be done in each year as part of completing that phase 3 program.
So now my clarification was in terms of operation is, you know that a lot of projects are not being done. So what are you doing to make sure that rather than saying we don't have that contract, we don't have this, what gives us the confidence of picking more projects if the previous one are not done? Especially like even on operational matter, I wanted from you some accountability or some chronology of the Dargaville $8 million or 7.2 million, whatever it was, cycle-wise project in terms of where did we fail or if we failed at all. Same thing with we have to have some accountability why we are unable to deliver because we are scared of that 42% escalation.
So through the chair, just in terms of delivery at the moment, in the first quarter, the Kaipara volume delivered in transport, and I haven't got the December figures, but the first quarter was 80% higher than the equivalent quarter in the previous year. Volume is being put through. Your emergency works program that as a result of the damage of 22-23 was close to 40 million of work, which is almost the equivalent of your 3-year program. That is something that cannot be delivered in a single year and was never planned to be delivered in a single year. It's phased based on risk, appropriateness and timing. So that's how that has always been, and it's how it's been put into the LTP. With respect to the Dargaville Transport Choices program, that program, the milestones of timings of the government program were all met by council. So there was an initial timing to achieve the pre-implementation funding. We achieved that. We got the pre-implementation funding that was delivered to council. That supported the detailed design, that supported the public consultation and paid for those things. The next milestone was mid to late October, which was to get the implementation funding agreement signed. Council met their timeframes of approving that funding agreement. You'll recall the council approved for that signature to be added. We added that agreement the day we submitted it, which was the day before the deadline. Waka Kotahi made the call to put the entire Transport Choices program nationally on hold and until they receive further guidance from government. At that time, they put every project across the councils on hold that hadn't already been committed to, which included Dargaville. They then waited for government guidance, and in a letter that I believe we cover off in the operations report, in a letter from the minister in a few days before Christmas, he advised that any funding agreement that was not signed at the time of the program being put back on hold in October would no longer proceed. That included Dargaville Transport Choices, and it included the Far North Transport Choices component. Components of Whangarei went through because they're in the tier 3 urban centres, and their approvals were literally a week earlier. So their approval process were a week earlier, and that's how they achieved their ones.
Thank you.
Good. We also just had another question from Councillor Howard regarding percentage of rework. So I think Bernard's got some figures on that one. So.
Yep, so through the chair, just to give you an update on where we're at with our summer pre-seal season. We are currently tracking around 60% completed through those works. With regards to our state highway detour routes, that's looking around 80%. Of that, there's been 200, just over 200 completed work dispatches, so individual either dig out or stabilised patch repairs. We've audited and passed 178 of those individual dispatches, around 88% audited and passed. But we've had 8 of those 202 work dispatches either failed or where works are on hold, and in all cases requiring rework. So we're about 3.9% failed patches for the summer season to date.
Patches, my ignorance, please. These are areas where basically you do resealing, right? That's
through the chair, not necessarily. So we have what we call our pre-seal repairs program. These are patches that are targeted to those areas that are getting a reseal treatment. Outside of that, we do, however, target some priority one, sort of high priority patches around the network as well. And they form part of the overall program.
So I guess the simple question should be, patches are different to potholes.
Correct. Yes.
Carry on.
There was one other question about lighting design, that was from councillor Howard. Yep, so just in regards to the street lighting design for subdivisions and the lights. So the reason subdivisions are included in the lighting design manual is because council ultimately will vest those assets back and be responsible for those assets. So as part of the development where council is going to be the ultimate owner of the asset, developers are required to build those assets to council standards. Yeah.
But the developers will do the initial work.
Yep, so the developers do the design, council approves the design, developers then do the installation, and council then do the final sign off that the installation meets those designs. But the primary reason for that is a future maintenance cost. While it's all well and good to have a unique lighting design or every different subdivision, the future cost to council of maintaining high cost or rare luminaires or light lamp posts and everything else and non-standard often outweighs the benefit of having something that looks like that. The other thing is, over time, we cannot necessarily source those weird or unique light stands, and so there has to be some form of standardisation as part of that.
That's fine, but my question was more about, I read it that, we were funding some design, the way it was put.
Yep, so no, council don't fund it, we oversee it then.
Okay.
Yep. And then there was another question, sorry, from councillor Vincent about what size vehicles are used for road inspections. So do you want to cover that one?
Yeah, okay, so through the chair, predominantly utes, contractors do use utes. In some cases, they do have, I think they've got one van still in their fleet as part of their signage auditing and response, but yeah, predominantly utes.
I guess if I may just lead on from that, Mr. Mayor, because my concern is because I actually have two vehicles, one with a larger, like a unit size wheel rim and another smaller one, and the ride experience is very different between the two. And if the riding supervisors are travelling along in a ute, they might consider the ride quality to be a lot better than it would be for perhaps people travelling in a smaller vehicle. So I just was wondering how that could be resolved.
Well, there is, through the chair, there is a technical way of measuring ride quality on the sealed network in particular, which is actually measuring the ride quality, which is done by a specific machine that's done annually. And that does your smooth travel data and those sorts of things. In terms of when the inspectors are going around there, their defect identification is based on visible defects not meeting the standards of the specifications. So it is not dependent on how they feel the road travels. It is dependent on the depth of corrugations that are identified or the size of the pothole and those sorts of things. So,
through the chair, if I could just add to that too, the inspectors are generally out there, they're travelling around 20, 25 kilometres an hour at most, undertaking these inspections, given the element of the scope of issues they're trying to identify. So it's at that low speed, they're not really getting that true reflection of the ride quality, which is why we have within the contract parameters around identifying the defects. So an example with our corrugation, its length of corrugation and depth of corrugation triggers a dispatch record to it, as opposed to the feel of it.
I think the question's been sitting at the back of my mind for a long time, so thank you for taking the trouble.
Thank you.
So I believe that is all the questions, if there's any, oh, sorry.
I sent a question through, it's on page 5 of the presentation.
Oh, okay. Yep.
Yeah, it was about the Tara Road, Garvalino Road intersection safety improvements. It says implementation plan the 12th of February. I was just checking what that was going to entail because we've had discussions at previous briefings.
Yep, through the chair, I do believe Anand is also going to address this one, so I won't take from him on that. But as far as what we're looking to do on the 12th, so the 12th of February, this is relating to realigning those intersections as far as the line marking layout changes, priority giveaway changes coming up on Tara Road. So that's what the works are targeted for the 12th. There are other options we're considering with regards to the section layout that could be undertaken concurrently or at a later date, but specifically the line marking layout changes.
It's changing the priority of giveaways to improve it.
So there's no actual physical works to take that, the hill out and move the power pole.
Not from the, not with regards to the works being undertaken on the 12th of February. No. Yep. That's something still being considered and priced up at the moment.
Councillor No.
Thank you, Mr. No, I had sent one question, obviously didn't come to you. It was more to do with, I got lots of complaints from people that you do a little things and you leave the rest of it. I got photographs of Erangak Post Road, which is being sealed in patches, and they are marking, the white marking, which is corner of the road at 2 places, hardly needs any work. And rest of the road is the culvert and the bridge, everything is broken, like heaps of potholes. And people said, why you have to do that little patch, ignoring the rest of it and then come back to do that. So mine is your modus operandi. How do you actually decide to do work? And people are concerned, why don't you do the whole patch at one go? Why you have to send all trucks and everything to do a little patch, which is inconsequential because it's just a corner and not dangerous little patch. Is marked in, I have pictures, I'll send it to you.
Through the chair for that specific one, if you can send the pictures through. So, but generally there's multiple processes that have gone through in terms of figuring out priorities. In terms of revisits, there's often a perception of revisits when we go and do these pre-seal repairs, which then bed in before going back and doing the entire sealing. There is temporary repairs that are often done over the winter season that need to come back to and do the more permanent repairs in summer. But also ultimately there is insufficient budget to go and do everything. And we're working with Blair and Tim and Ventia at the moment in terms of how we can potentially look at doing a more holistic approach on a single road. What that does mean is that will result in other areas of the district getting no work done on those roads. So it's about that balance of making sure the critical priorities are covered, and also making sure that when we're there, we're getting best bang for buck for council.
Councillor Howard.
Thanks, Mr. Mayor. All right. Appreciate that, Calvin. Look, let's cut to the chase. I mean, we've got a situation, you know. Look, I observe, you know, a lot of the sealing work that's been done over the season. Good, you know, and that. But without really wanting to take too much of the council's time on this, because it's probably a matter of understanding, I would really like to know if there is a prescriptive strategy that is agreed by all of the contractors that you use on potholes. We've talked innumerably about a disgrace that is the potholes just past the first one-way bridge on Cove Road, past Mangawhai Heads Road, which still 6 weeks later is an abomination. Now, that is costing us our money, our ratepayers and the NZTA subsidy, that is costing us all the way through. The contractor can say all he likes about, oh, that's right, we'll pay for it, we won't charge him for that. Actually, it is costing our ratepayers, it's costing us all the way through. So there was no specific strategy applied other than just putting asphalt over loose metal. So who is auditing these jobs? Who really is signing off? And how can we now have real belief that our money, our ratepayers' money is being as well looked after as it should be in these things? And I know it might seem trivial to talk about 2 potholes, but they have been, they're just the tip of the iceberg, I think, because it doesn't appear to be a strategy. And I used an analogy in the last week that, my dear wife, who's been in dental for 45 years, and says that, if you've got a filling, you clean it out. You clean it out, you make sure it's got sharp edges all the way around, so the filling will hold. Well, we don't do that with roading, but that's the prescript that I understand, is it? So who is checking all of this? And who, let's get some real authority and accountability, because I don't want to know about contractors who say, oh, we won't charge it. They've already wasted our money, and we have a mandate, we have an attitude of do it once and do it properly. How can we get these things sorted out? Because if volume is the issue that is stuffing up the quality, well, that's another matter, and we're already a lot more aware of the issues of trying to do too much. But, let's not use that as the excuse in these cases. This is just abysmal workmanship. Sorry to be so blunt.
Yeah, you want to answer?
Through the chair, just want to reflect back on earlier response around the amount of completed work. Our team are out there auditing. We have full-time dedicated area auditors and a network supervisor who's out on the network, as well as our engineers rep. We're up around 90% audit percentage across those stabilised repairs, recognising they are high impact, high cost repairs. The particular site there on Cove Road was identified prior to Christmas. Unfortunately, due to moratorium dates, when our contractors must be off the road ahead of public holidays, and recognising the impacts of getting in there at that point in time, we had to undertake what we call a holding repair. As you pointed out, we slapped a bit of material on over top of the loose material. Expectations were it wouldn't last full length. So we did have, on our contractors' behalf, a audit expectation set. Their staff were out there on a daily basis, observing, checking it, and pothole filling as required. We had a small opportunity at the beginning of the year to get in there. However, we considered some of our other works outside of school frontages and the like as a priority for us. So that contractor resource was allocated to those school frontages, get those works done before school holidays finished up. We are moving into Cove Road this week to undertake the proper remedial work of that site. It's not just a pothole issue. We have a more significant issue there where the particular treatment selection for that site has failed. We do have a number of things we look at when we're determining that treatment factor. We believed at the point in time we'd made the right decisions as far as that particular patch requiring digging out installed. We believe the issue we're dealing with is related to the imported material from the quarry having a high clay content when we were lime stabilising that particular site. Hence, our contractors have put their hands up and accepted liabilities and all the remedial costs is being covered by them. We haven't paid for any of the works to date. This particular site is part of the 100% funded targeted state highway detour works. But to date, we haven't paid a cent for those works. Recognising, of course, there is a impact on residents, in particular those that are travelling that site every day. But we are working towards addressing that head on.
And also recognising there's an impact on the ability for the contractors to do work if they're coming back and fixing that site. So that is where the work volumes and their ability to carry out other work is impacted. It is not something that is in Ventia's interest or council's interest to have rework, and that's why we have those guys out there. And so the recognition of the criticality of those repairs is why we're auditing that 90% odd rather than the minimum 10% that sits in the contract. These are repairs that if you don't get that pre-seal repair right and you seal over the top, then you're basically asking for a disaster in the run. Yep.
And if I may, just an extension, and appreciate the feedback and the response. I want to really rest this point that actually every time, and this is using tip of the iceberg to highlight a broader issue, but it's a very good tip of the iceberg. So it's costing the community across the board every time one of these is not done properly first time up. So and that's our real narc.
So I think through the chair, completely acknowledge that. Going back to Bernard's point, as opposed to a quality of repair. So Ventia do have a repair handbook and they have specifications of how they repair things. There are decisions made on site about the treatment that is appropriate and also balancing that against available costs. So there are risk trade-offs between the treatment selection and the budget available. So at times that risk trade-off fails. And Cove Road is one of those risk trade-offs. Another example of that in the Whangarei region, there was a lot of noise last season about the failure at Solomon's Point of the chip seal on the way out to Whangarei Heads. That again was a risk trade-off decision that we were at the end of the season. It was not optimal for sealing, but we decided with the contractor that it was best to try and seal. That failed. That was one failure out of about 160 seal sites. So there are areas where those risk trade-offs they happen and they work and they're a benefit to council. So there are, but unfortunately this one was in quite a high profile area and at a poor time of the year to be able to rectify. So
sorry, can I just chip in? So I'm just taking over the chair because the mayor's left the room. We're now 13 minutes over on this presentation and we haven't even started it yet. And we're due for a break. Some people may need to take one.
Yep.
So can I just suggest that we adjourn for 10 minutes, come back at 11:18 and then let's get through the presentation and save the rest of the questions till the end or via email, depending how we get on. Thank you.
Thank you. We'll reconvene this meeting and thank you, Deputy Mayor Larson, for stepping in. I had to take a call. Next part of our agenda is LTP activities, roading and footpaths, and we have,
He hasn't done.
we haven't completed the June project. We are continuing then with Calvin and Bernard. Thank you.
Through the chair, we will quickly run through the slides. I know a number of questions have been raised from them already, and we'll try and catch up some time for you. So routine inspections and audits, we covered auditing quite substantially. So the KDC area auditors, two of them, and the contract supervisor are spending a lot of time at it on the network at the moment. 162 audits completed through that 2-month period. If we go through to grading schedules, obviously as we move into summer, as we mentioned at the last update, the ability to grade reduces with the lower moisture content in the road. However, where we can, we will take advantage of any rainfall and grade. In saying that, often there's this perception that we had 10 mil of rain last night, so we should be out there with the graders. Generally that won't get into the road base, and so it doesn't give you that moisture content. We did manage to do across November and December about 144 kilometres of grading in preparation for the summer season. Move to local road detour work. So this has been a real focus of the construction program over the last 2 months in preparation for the closure on the 26th, so in 2.5 weeks' time. There's been a combination of Waka Kotahi funded packages from the impacts of the last closure, Waka Kotahi funded packages of the preparation, normal routine works that we've packaged and moved forward, and also the detour traffic management and the wayfinding things. Some of those activities were placed on hold for the 2 to 3 week period over the moratorium over Christmas, but we're back into it now. As we mentioned, the signage and priority changes at the Garbaleno intersection are being done next week. There's some sealing on Langs Bridge being done this week, I believe. And the final areas, we are at the moment reassessing the impact on the program of Waka Kotahi's decision to push that closure back from what was going to be today through to the 26th, because under our program we had anticipated having a month or so at the end of the closure of conducive time to do some works. What that's meant is by pushing the closure out and extending it, that has had an impact on some of those projects. So we're looking at them as part of the risk, more so in the Whangarei area than Kaipara. I think we've managed to deal with a lot of the Kaipara stuff. So later this week, early next week, we'll be going out, transport industry advising of the restrictions on the different routes. Not surprisingly, and we've already added this, there'll be the reinstatement of the truck and trailer restriction on the Cove Road route, which was there previously. And in addition, we are putting a truck and trailer restriction on Waipu Gorge Road as well. And there's also working with Waka Kotahi and the locals and Fonterra and the likes. We're looking at a locals only signage on a number of sites with a sticker approval to go through if you're a local traveller. Yep. Emergency Works Recovery Program. So just over 2,000 individual work items completed to date. We've got 56 sites, as we mentioned prior to Christmas, as phase 2 to be completed within this current year. They remain on track. There's 15 sites that will remain at the end of this financial year as the high complexity phase 3. We've gone out to the geotech design for, I think it's the 5 or 6 most critical of those sites. They're currently underway with the geotech investigation and detailed design. As soon as they come back, that will come out, go out for construction tendering. And then the remaining phase 3 sites will go out for tender to the geotech industry. So the approach we took with that across the region was we realised we have a shortage of geotech industries. We asked for an expression of interest from the region. We got that down to 5 specific geotech suppliers as a panel across the region, and we got Waka Kotahi and council approval to go outside the normal procurement processes of $100,000 direct award. And each of those 5 have been given a patch to deal with the most critical sites. It's dealt with about 20 to 25 of the total 75 regional complex sites, with the balance to go out to normal tender. So that was a way of getting those the most critical complex sites progressing without the tender process, which would have added 2 to 3 months to the process. Obviously, there's still works being done through November and December through the emergency works, culvert clearing, dropouts across 5 roads, tree cleanups continuing. So all those are still under that 100% funded category. And that is the end of the slide pack.
Any questions?
Could you just quickly go back one slide and leave that up for us? Oh,
Councillor Lambert,
thank you.
Councillor Lambert, Councillor Vincent, and Councillor No.
Thank you.
Mine's fine. I just wanted to have a good look at that.
Oh, okay.
Well, let's see.
Councillor Vincent.
Thank you, Mr Mayor. I guess with the Rindu enclosure period, like there's a lot of work being done in preparation for that. It just occurs to me, will there be a follow-up inspection at the conclusion of that period to see which of the remedial works have failed and see, like in terms of the package of funding, surely there would be a means of ensuring that those things, their integrity is maintained. I'd like to see that anyway. Is that part of the deal, the intention?
So through the chair, there's continued monitoring of those routes that is funded by Waka Kotahi through the closure period. And at the end of the closure period, very much like at the end of the last detour, we will sit down with Waka Kotahi and identify that closure impact, whether that be on any of the works that have been undertaken to date or new accelerated deterioration or anything else.
Through the chair, just to add to that, because this one is planned as opposed to the previous closure, as part of that, there's a pre and post joint inspection, thorough inspection being undertaken. That's all video record and whatnot. So there's no dispute at the end of it as to the impacts.
So a bit like a car rally situation sort of thing, that would be that process. Thank you.
Sorry, just through the chair also, if I could just point out, we're missing the title up there. So that very top box, that's culvert clearing and flushing across 90 roads, is blue and following. That's what that one is.
Thank you, Mr. Can I?
Councillor No.
Thank you, Mr. Mayor. Now, my question was, I see those 238 roads and also this 90 roads culvert cleaning. I'm just getting a feeling looking at roads, is it that the resources are more diverted to Mangawhai at the moment and we are behind in culvert cleaning in Dargaville? Because apart from Waihu Road, which is outside Dargaville, there's a lot of work you are doing there. I don't see any of the familiar roads, if I'm not missing the point. Do we have some work to be done there or what?
Through the chair, this is a sample of 90 roads. And saying that this slide is specifically related to the culvert clearances where the work has been attributed to damage from the storms and funded through the storms. So one of the processes we have to go through when we're claiming these is we have to prove to Waka Kotahi that the issue didn't exist before the storm. So if there is a dispatch of ordered works that hasn't been able to be addressed prior to the storm, and there's still an issue there, then Waka Kotahi will obviously fund that as emergency works damage. So in parallel with this, the normal drainage works continue, keeping in mind that Kaipra's current discretionary drainage maintenance budget is somewhere in the vicinity of about $160,000 a year. And that doesn't go a long way. So that there is, we're making the most where we can of, so there's drainage maintenance that sits in the lump sum where they deal with the slightly blocked culverts and those sorts of things. But if you've got major drainage maintenance, then that has to be prioritised against that.
So my question was specifically related to 15 emergency response work, which is phase 2 and 3 to be done in 2 and 3 years. And my question was more particular about, are these areas needing immediate attention because of Gabriel? If we come again, have you actually looked at how urgent they are, those 15 sites?
So the criticality and urgency of those sites has been assessed, which is why the 6 that are out there at the moment are the ones going first. Also, for each of these sites, there has been some minor remedial works to divert water and protect the sites as they currently are, as best we can, to ensure no further damage if another event.
Thank you.
That's all. Nemeth?
Thanks, through the meeting. I don't see Murder Gap up there, or I don't see any urgency for that. That road is still closed. It's becoming a critical access way from a large section of beach to civilization, if you know what I mean.
Through the chair, I will just touch on this one a little bit because I'm not fully across the entire site, but Mahuta Gap is extremely complex, and it has been identified as a site captured within the 15 that may require a resolution of council to determine approach. So is it feasible to reopen the gap as we've had it in the past? Given the complexity, we now have significant dune sand migration and movement into the gap, and an active watercourse at the base. Any works we do there are likely not to be endorsed by Northern Regional Council if we start to look at it from a permanent repair perspective. So hard forms of engineering to hold back any further migration. So there's a lot of consideration there that I believe will need to be detailed and brought back to this council for a decision in due course.
Is it a Gabriel one? 100%?
Through the chair, being a complex, it's not 100%. And one of the processes of the 100% or any of the emergency works funding is what Kotahi also have to endorse the solution decision. And the solution decision has to be viable from a cost benefit analysis. So there are probably 4 or 5 sites across the region, this being one of them, and I think it's the only one in Kaipara, which will require a strategic decision of council about the future of that road or options for that road, given the complexity and the funding. So we're working through that at the moment in terms of what the options and implications are to bring a paper back to council on the future for that. Yep. It is the most complex of your sites.
Yeah, and the other thing is the 4-wheel drivers are just making their own and doing their own repairs. So it's become a bit of a social issue as well, really. But there is a community that is going to be cut off because of that, because they go via the gap from the beach. Bulls Gorge. Bulls Gorge.
Yeah,
Bulls Gorge.
yes, through the chair. Yeah, so the Mills Gorge community there, we do have other access onto the beach that are being maintained as we speak. This Mahuta Gap, just to highlight that section where the slip has occurred. There was a resolution from council back in 2015 from memory, don't quote me on that, to maintain that access way as 4-wheel drive only access. So it is not maintained to any higher standard than 4-wheel drive. We are aware of the 4-wheel drive club's use of the entrance and have determined that is fairly low impact considering the overall issue and risk. And in fact, they are progressively wearing it down and almost enabling better use and access as you know,
Supplementary.
in general.
This is a supplementary question. If we are going to maintain it to that 2015 resolution, we don't need to design it to take 40-ton trucks and sedans, do we?
No.
That's cool. Thank you.
Okay. Is that completed?
Through the chair, yes, that is the end of our presentation.
Yep. Okay, thank you very much for that presentation. Next, we have activities footpaths. And Nama, we present this in person.
Dawn is on, I believe.
Thank you, Mr. Mayor. We bring this roading paper to you as part of the long-term plan briefing that we've had over the last 5 months. And also as we start to conclude all the LTP activities in the coming month to go into the consultation document. So the primary focus of the paper is focused on recovery. So you would have heard Brad Olson this morning talking about there's some nice to haves, but when you don't have the money, you've got to focus on your core activities. So for roading, we are talking about recovery. When it comes to water, wastewater, we will be talking about growth and some level of service improvement. So today's all about recovery. However, we have got some minor discretionary service improvement programs within the paper, but we want to have a conversation with council in terms of what goes out, what comes in, and noting that we've got a constrained position that we currently face with the Three Waters now coming back in. We have included basically an adjustment, bring it up to today's dollars of 42.5%. And I will just pause in a minute to give Calvin how that 42.5 is made up so that everybody has an understanding on how we got to that position from where we were 3 or 4 years ago. We have taken a zero-based approach. So we've got the must-dos, and then we've got, we can bring it in. Now, a zero-based would normally mean you take each line item and you assign that to a road. So what we can do and look to do, it's a piece of work that we'll bring in the coming months when we come back with a final position on the roading LTP, is come up with a set of roads as much as we know them. Some are known at the time. We've got a fair idea of what needs to happen in the coming year, so we can bring a program that represents the funding that we set aside or what council agrees on today. We've also included some efficiency targets. We note that, whilst we don't have a very big program, if we start to look 3 years out, we should be able to get some efficiencies in how we do things and not go back and repeat failed failures. So that's one thing that we're going to impress upon our contractor going forward, is we do want to see minimize the non-jobs. They should have enough nuance themselves to work out if the whole repair is required that sustains the traffic on what is a busy road. So I'll just do a bit of a pause, and we just want to talk about this 42.5% so that we can get that out of the way and then concentrate on the activities going forward.
So I'll let Dawn jump in if I get it wrong, but I will start off. So at the start of the 21-24 LTP period, within any LTP, there's an allowance for escalation within that LTP. So within the roading program, that allowance based on history was 2.5% per year. And that is accounted for in the National Land Transport funding, and it's accounted for in council's budget position. previous to COVID in 2021, our average escalation on the maintenance contract sat around 1.5% to 2%. What we then had was an impact of, I think it was 12.5% or 13% in the first year of the maintenance contract, a further 8%, and I think we're sitting at 6% this year. So what the first component of that 45%, and I think it's about 27% worth from the top of my head, is catch up on the inflation impact from the previous 3 years. So that is where council's budgets and the NLTP budgets have increased by about 7.5%, but the wider budgets have increased by closer to 27 to 30. The impact of that is less work has been able to be done in the whole 3-year period. By not addressing that inflation, it means you're starting from an artificially low base with all your budgets moving forward. So that's the first part of the inflation. The second part of the inflation is the projected moving forward, and I think from memory, Dawn, that is 5% a year.
4, 3 and 3.
4, 3 and 3. Percentage. So that is projecting along the lines of the information that Brad was presenting earlier about what we anticipate the budgets moving forward to be impacted by inflation. The final component is recognising that there is likely to be some form of cost shift, cost adjustment or correction through any retention process. And wherever that comes, there's an estimate which brings it up to the 42.5%. Those things are then obviously offset by what Anand said previously about looking for efficiencies within the delivery and how we package programs and everything else. One of the main ways of getting those efficiencies is getting certainty of program up front and moving to putting out 3-year programs. We've done that in the past with bridges, where we've had some really good success with the bridge programs, but it's about how we can expand that moving forward. Is there anything else you want to add to that, Dawn?
No, I think you've covered it well.
Chair, just a clarification on this 42.5%. You mentioned National Land and Transport Fund, which funds us using 2.5%. Have you taken approval from them that you are going ahead with this and they will approve at 42.5%?
So through the chair, the 2.5 that I referred to was what was approved by council and approved by them under 24.
Yeah.
This percentage is what we've identified as being required both in the LTP process for council and the submission to Waka Kotahi for the NLTF. As everyone may have seen in Monday's paper, the NLTF, Waka Kotahi are putting clear signals out that they can't afford to fund the national roading program at the moment. So this is where the roading budgets become rather complex. We do not know our final roading budgets for 24 to 27 until we have both the council confirmed LTP and the confirmed NLTP budgets. Now, the NLTP budgets have been indicated that they will not be out until September, late August, early September, which is very similar to last year. What then has to happen is staff need to assess what has been approved and what hasn't been approved, match that against the approved council share, and come back to council with a confirmed program. In that program, there will be trade-offs that council need to make and say, actually, we have available subsidy over here that we don't have local share for. Do we need to add more local share in? Or we have surplus local share that we're not getting subsidy for. What do we need to do with it? Those discussions will happen in October. And it is one of the things that kind of that timing mismatch has an impact on year one. And it's something that we are doing best to mitigate. What Kotahi do provide us with in May is an indication of the funding of our continuous program. And that is the maintenance and operations and renewals component. And that effectively allows you to plan year one as best you can moving forward against council budgets. But until both of those funding sources are confirmed, then you're in that little bit of limbo land about what is actually available to be done.
So the mismatch means we cannot actually decide how much rate increase we should have.
So through the chair, the approach that is being recommended by staff and has been gone through at each other cycle is council should put forward what they believe they need to do as part of their transport program. So Waka Kotahi, the initial bid submission was put in based on network needs. Ultimately, Waka Kotahi will not approve anything greater than what you've put in your LTP. So your LTP needs to reflect what you as a council want to achieve. And then we need to push the case hard with Waka Kotahi to get as much as we can. Yeah.
Dawn's up on the screen there, stand up. Thank you, Dawn.
Thank you very much. I think the point I just wanted to clarify as well is that the indicative budget that comes out in May, last time around, they came out with a very small budget and then they revised it and we actually got more at the end of the day.
Okay.
Okay, thank you, Dawn. Mr Mayor, where we've got to is the position that's on screen now for the overall categories of our program. So there's operations and maintenance and capital renewals and refurbishment. So that's our day-to-day bread and butter must-do bucket of funds to go out and repair the roads. And then we've got some discretionary funds around capital. And then what this term low cost, low risk, which is basically programs less than $2 million. We basically did a bit of a recap on the conversations we had in December, where Councillor Howard, I think you had indicated they'd take the current year's spend and then up it by 40 over the 3 years. Unfortunately, we can't take that methodology because this has been presented to Waka Kotahi, NZTA. And so if anything, we can pull back, but we can't go back with another methodology. So we've adopted what has been presented, and this largely reflects the costs where we were in the 21 year, bring it up to today's dollars, and then add a little bit more to get a little bit more done. We've then taken another approach in terms of applying some efficiencies. So you will note, and I'll cover that off in a minute, what we've allowed for. Now, we can increase it to 20, we can decrease it to 5. It's all relative to how much work we get done. So we do go from a total program of 149 million over 3 years down to 136 with some efficiencies brought in, but it also reflects less work in the capital and low cost, low risk. So just by way of an example on the O&M, again, this is our must-do sort of program. We've taken in the first year 10%, 12 and 12. You'll see in that little box down the bottom that the budget for this financial year is 8.2. Applying that adjustment, 8.8, sorry, apologies. Applying the adjustment, it brings you up to today's equivalent dollars if we were to go to market around 12.5 million. But this program also reflects the fact that we want to get on and do more because there is a backlog of activities or repairs out there. The funding source is 62% subsidised, and what hits our books is 38% is what we have to allow for. So the opportunity to, I guess, review further in this area is the difference between 12.5 and 15.6, roughly $3 million. Noting that, we will have inflation that we need to take into account. We're hoping that some of the efficiencies will outbeat the inflation. So not a lot of headroom to do a lot of trimming in this area. The other areas are capital renewals and refurbishment. Again, we've applied the same efficiency, taking the budget of 9.2 brings it up to 13.1. today's dollars. Again, you know, if we were having a conversation around what we could reduce that by, it's the difference between 13.1 million and 18.1 million. Just keep in mind that the more we trim, we're in a maintain position, and not going forward. And the way the roading deteriorates is that I guess every year you leave it, you're losing further years in the back end. So at some stage it'll catch us. And I guess what we're saying is that rather than have a shock in 28, 29 year, let's have a smoother path to getting our roads repaired. So taking a zero-based recovery position, we've come up with a table that reflects what is really the must-dos. So the first column is the categories, and you can correlate that back to the appendices. And what we are saying is that attachment A and B, operations and capital renewals, is a must-do, and it reflects the fact that there's some efficiencies brought into it. We do want to continue with road safety and markings, although at a reduced pace than we presented to you previously. And the paper talks to, the appendices talks to what has come out and what brought back in. And you would note that, and then the stage 3 recovery work. So that's the, Kelvin talked about it this morning. We have allowed 9.2 million to be brought in over 25 and 26 years. And that's sitting at about 82% subsidy at present time. And you will note that on Appendix D, we talked about it in December. There was a line item of $2 million each. We did remove $500,000, which was associated with Molesworth Drive, basically laying asphalt over a period of time. We've taken that out. Whilst it's and that's the direction we took from council in December. But what the 1.5 allows for is if you do have a washout, you basically, to build the road back up, you take it from from attachment D bucket, and then you do your rehab from either attachment A or attachment B bucket. So it's just the way the budget is allocated. You've got, if you want to fix a road, you pick it from the various buckets. So we can't reduce the 1.5 any further because we know we've got quite a few dropouts that need to be built back up. Do that out of attachment D, and then you do your reseal metalling within attachments A and attachments B. Now on the far right hand column, again taking direction from council, you know, we've got a recovery period to get on with. So there is some discretionary spend that we've put up for conversation with council today. So in summary, they are the Kaihu Valley stage 2. It's likely to be 100% funded if we do have another pool of government funding, but we're just not quite sure either whether that will be partly funded or not. Obviously, we talked about the Alama car park by the police cabins out there. Obviously, we got clear direction that we want Settlement Road, Devage and sections of Cairns tidied up. We've got the Wood Street connectivity, which we'll cover off in a minute. And then in terms of attachment D, we've just got a number of rural intersections and urban intersections that, again, we would like to do, but obviously they can fit into that discretionary pool. So we've got about $15 million worth of programs there that we'd like to have a conversation and direction from council today.
Yeah. So through chair, can I?
That's right.
Yeah. So just particularly on this Davidge Cairns Lamont, it adds up to $12 million, and you want this money to be raised as a debt. What potential it has to recover that money for the council? How are we going to recover this money which we are spending on the new settlement, Davidge and Cairns, and Alamar Boat Bank. It's 100% debt funded. That's what you said.
Correct, yeah.
Yeah. So what's the idea?
Well, the idea is council needs to make a decision whether they want to proceed with that program of works or not. And we don't recover the money. It's paid, it's a council cost. There's no subsidy.
That's what I'm saying. Would you give some figures on what we're gonna get out of development contribution or what? Things like that. Otherwise end up in general rates, if you don't take the debt. Thank you.
Councillor Larson?
Could you just clarify further to what councillor Nair is referring to as a $12 million cost?
Yeah, I'm not sure, councillor Nair,
Okay.
new settlement Devage and Keynes is 3 million. And
You go on the figure where you say how it will be raised. There's another chart you have given us.
in the presentation,
Yeah.
Page, please.
Which says how is the funding source? And you go in that figure.
Is it from the agenda?
Will you carry on? I'll send you the page.
No, we would like to hear that. Where is it? Page.
But we don't stop the presentation. Carry on and I'll fish it out for you. Yeah, thank you.
Did Sue have one substation?
Yeah, just on there, but we could look at, the Alama agreement. So this parking objectives to the access to the parks, specifically finance.
It's a
So,
tax-
sorry, we
Sorry.
can't hear what Sue's saying online here. Sorry, Sue, can you come closer to the microphone and repeat that?
It is attachment C I'm referring to.
if I come to it.
And it says clearly here, all those three items. Level of service upgrade, Lawrence, Kames and Davidge Road, 9.5 million. 100% debt. And Link Alamar Crescent.
Right.
That was what was proposed in December, and then this is the.
Yeah, that's what I'm saying. Are we going for it?
So it's
That's what-
less than-
Well, just let Sue answer the financial question, then I'll come back to the program.
Okay, so just in terms of the Alama Boat Park, we can look at funding that from financial contributions if there are sufficient financial contributions, because it does give us access to the coast. So that's a potential rather than debt. So we can look at.
Thank you, Sue.
So answering councillor Nair's question through you, Chair. So if you look at the column headings, the first column is what we presented to council at the 6th of December council briefing. We had a lot of discussion around what should be in and what should be out. We took that feedback away and you'll see a column called proposed. So it's the column that's called proposed is what we're having the conversation around today. It goes into these figures that you see on this presentation. And that's the direction that we would like to go through. So I'll just talk to attachment C. There's a whole lot of programs there that we did put forward on the 6th. And we've taken a hard line in terms of and direction in terms of what needs to come in and what needs to be deferred, and also take some cost out in terms of we can't deliver the full program, so we'll take a reduced program going forward and then build back into years 4 to 10 in the future LTP. You will note that a big number down the bottom, stationary recovery, that was actually missing from the briefing on the 6th. We have to bring it back in because obviously we've got recovery works that we need to do. And a similar approach has been taken for Appendix D. As I said to you, local road improvements has to stay in because we do need to repair the roads as we seal and metal. We've kept the rural intersection roads in, and obviously there's the new linking the two bridges at Kaiwaka is proposed as well. However, there are a number of programs that have been deferred, and those are listed on this presentation. Whilst we would have liked to have had them in, we know the financial constraints that we are operating in, So again, those have been clearly deferred into a future long-term plan. I might just pause there, Mr. Mayor, and take questions on the roading components before we jump into the tree.
Great, questions there. Councillor Howard.
Thank you, Mr. Mayor. Thank you all. I have two quick queries, but the first one is road safety signage delineation, road markings. You go from the 500,000 to in 2026 to a significant figure of 1 million. So 4.6 all up. What is the 4.1 million? What is the basis of that?
I'm just looking at Dawn, I believe it's about the cyclic road marking.
Yeah.
So road marking there's maintenance road marking, and then there's a cyclic grade that the long life road marking that's done every 3 to 5 years or something.
So that comes in 3 years.
Yeah.
All right, well, yeah, but it hits like that.
It was 8.5, Councillor.
Okay, yep. I thought that it was a higher figure. And I think that just earlier to Councillor Nayer's point, had we not established in a previous meeting that there's something in the order of $400,000 generated in rates from Cairns, Lawrence, or Cairns and Devitt's roads? I think. Being part of the justification. That's all.
Oh, are you wanting some feedback?
Yes, please.
Well, my feedback is thank you for going back through and looking at where we could significantly cut these things, because the original round had things like 3.5 metre wide shared paths costed into it, which we gave very clear direction. In general, I think that we just wanted the basic roads, and that's what we appear to be seeing. We see things cut by 2/3, so that's a good start. I think we do have to prioritise some things, and I think you've followed this previous direction and done that, and I'm happy with what you've presented to us. Thank you.
Vincent.
Well, thank you, Mr. Mayor. Yeah, well, I did too, whether like looking where to put a red pen through with the connection between the two bridges at Kaiwaka. See though that it actually does attract subsidy, so that dulls the pain a little bit. But nonetheless, that's sort of something that's separate from everything else. They're all desirable things, but I'm not sure if we can afford to not make some savage cuts to see where the number ends up in terms of overall rating costs. Perhaps we can come back and we see what the overall numbers look like. Up from 3 orders, please.
Thank you, Councillor Vincent.
Just through you, Chair, for clarification, we'll accept the paper as our position to go into obviously the calculations of the rating increase, and come back. Obviously, we're coming back to council on the 21st anyway, with a broader program of LTP, so we can pick it up then if with the direction that.
Yeah, I'm happy to see we're starting to trim things down. Steve Maris was telling me this morning there's been a lot of staff input into looking at budgets, and we see that come through.
So through you, Mr. Mayor, if I may, so obviously this is the roading stuff. The big key briefing for us is the one on the 21st of February. So we're going to bring obviously this back to you, but all the other budgets as well. We're working hard in the background to trim as much as we possibly can on those budgets as well, and bring that picture to you. I suppose as far as Anand's discretionary amounts that you see there, we will omit from our budgets we'll bring the list back to you. So when you do see the sort of bit of a more overall picture, you can look at it. However, currently, we're going to omit that discretionary spend at this stage and include that into calculations.
Yeah.
Through the
So
chair,
want that clarity so that you're aware. That's what we're doing.
yeah, through the chair, just,
No,
yeah, thank you, Mr. Mayor. Just on cutting down and everything, in the slide, you mentioned a very low figure for footpaths, 69,000 or something for maintenance. Footpath is one thing which is gone expensive, 69, 81, 83, and no inflation adjustment. This is one item which costs twice as much because of the concreting cost, as Mr. Mayor will know. Why we are keeping such a low amount on this? This is a general worry of the constituents.
So through the chair, I'll just answer that one. Those there are respect to footpath renewals. So that is where you have existing footpath sections that have been deemed to be out of spec and need to be upgraded. So every 3 to 5 years, we do a full network-wide inspection. So the budgets there are driven by what has been identified as the future renewals program. As well as that, you have a footpath maintenance budget, which is kind of patch repairs, and then you have new footpaths.
Do you have budget for that?
So in the
I couldn't see it, that's why I'm
in
asking.
Appendix A, I believe. So footpath maintenance in Appendix A is about 104, 121 and 125,000. Yeah. But these are based on the current condition of your footpaths and the investment identified required to maintain that. The second one is about the condition where the footpaths actually need to be renewed and the assessed cost. So remembering that there's a lot of footpath across the Kaipara network that is relatively new. So those renewals costs will come 10, 15 years from now. This is about renewing like for like. So in a really simple term, attachment A is about maintaining your network to the current state. Attachment B is about making improvements to the core foundations of the network to bring up some quality, and also renewing assets that are nearing end of life. Attachment C and D are about making improvements in new assets.
thank you, Calvin. Councillor Lambert.
Thank you, Mr. Mayor. Directly relating to that, the shared pathway, the CAN project, was going to solve a lot of the archaic paving in Dargaville.
Yep.
Now that that's been canned and now that we've got to take over the maintenance, has that been reflected in those numbers, or is it just a generalisation?
Generalisation.
I think it's a generalisation, yes.
There would be an increased cost.
Yep.
Am I correct? And
yeah,
because there's a lot of those pathways needed.
There's kind of a balance as well, because those pathway improvements were identified in future years of the LTP.
Oh, yeah.
So some of those projects will still maintain in future years. And keeping in mind that now we've had the funding to progress that to a detailed design stage.
Yeah.
As soon as any opportunity comes up, we are well positioned to actually put a funding thing.
So it's a double hit, really, missing out on that and having to increase our budget.
And maintain.
Yeah.
Councillor Howard.
Thank you, Mr. Mayor. So on that, and it might be a bit of blue sky, do we have a plan or a view about applying to the new provincial growth fund for the likes of that Dargaville work?
Through the mayor, at present, we have no guidance on what the parameters of that fund are. The good thing is, if you take historically, those funds are about projects that are ready to deliver.
Yeah.
And we are in a very good position to be ready to deliver if it fits the parameters. Yeah.
Through you, Mr. Mayor, we are expecting the criteria, with any luck, for that 2.0 fund, whatever you want to call it, in the next couple of weeks. My understanding, it is going to be largely infrastructure based as well, and there may even be a co-funding element, but we haven't had anything confirmed at this point. We are keeping a watching brief on it, and our executive looking at projects ready to go that could be put forward with the council's approval, depending on the actual criteria.
Thank you.
So just to be, through you, Mr. Mayor, just to be clear that we will remove from our budget the discretionary spend that we see on the screen here today, and come back and have a further dialogue on the 21st. We had a number of questions come through. I think Calvin's answered the transport choices in terms of, was the government through NZTA decision. Question from Councillor Nair in terms of why operational maintenance is not inflated. It is in appendix attachment B. They are inflated. The attachment C and D are not, because they will reflect whatever costs we go to market. Well, they'll reflect the program that goes to market and the costs we receive back. We talk about Wood Road consultation, why golf course, assuming that you're referring to the stormwater.
Yeah, I was just wondering, this is not done in concrete, so you go for consultation for something which has been decided by the council. And this 20 million or whatever you have is not yet decided. So how can you go to consultation? That's what I was thinking about it.
Where's the $20 million, councillor?
So
$20 million.
Golf course extension of wastewater testing.
Different.
I think it is says the golf course one, yeah.
Okay. Yeah, well, we spoke about that at the last council. We'll bring it back on the 20.
Thank you.
Councillor Williams asked about Tara Gabalina Road. I actually drove that this morning. So I drove it down, coming from Cove, going into Gabalino, and you can clearly follow the direction of travel. I then turned around and came back up. And I could see the exact problem that we're facing in terms of line of sight coming across Gabalino. So I'm also the post is on a bit of a lean. So we'll be talking to my friends at North Bow to see if they can move the post. And at the same time, we'll trim the bank back. Failing that, we will do it. Because I do now clearly see the dangerous position if you're coming up Tara, going towards Gabalino.
Councillor Larson?
I'm a little bit confused about this particular piece of work, because I thought we'd already settled it months ago that it was definitely happening and that we were definitely moving the pole and cutting that batter, and that there were 2 days that it could be done before the Brindouins closure that needed to be booked in, or we're going to miss the opportunity. So I don't know what's happening with the sort of turnaround with that. Has there been some machinations behind the scenes that we don't know about? Or?
No, there's been some discussions in terms of the intersection changes that are happening as part of the Brindouin closures. And I did say to the team that I'd personally like to visit, which I did today. And I reconfirmed our position on the fact that we will move it.
So we're all good to go.
Just
Councillor Williams?
okay, through the mayor. So as you're approaching, like if you're heading down to the village and you're turning right into Gabalino, is there scope there to have a flush median so the turning traffic is actually, because there's going to be a lot of traffic going through there, so that will be building up to be able to pass over into Gabalino, and then the traffic can keep going to the left of it down to the village?
I might just ask Bernard, if you're able to explain what's happening with the road marking changes, that might provide some guidance in terms of what.
Yep. If you have a plan, Bernard, we can bring it up.
Yeah. Can I perhaps come over here, Bernard, so we can be heard?
Yeah, just so we're completely clear on what's actually going to happen there. That would be great.
Lava, can we get it up on screen?
I don't know if we'll be able to.
Well, can you just quickly pull up the drawing?
Just while Bernard's cover off Wood Street in a
I'm good to go. Hopefully.
I think we'll have to get it up on, if we get up on screen, it'd be better, I think, to talk through.
Complicated.
Yeah.
You could email it to me and I could share it.
We'll come back to Wood Street in a second. In terms of cemeteries, Councillor Williams, we are developing a program of trees, natives, or a schedule. And yes, we will let the family be part of that conversation. Obviously, park staff have to be involved as well, because we want a bit of a mix and match around the place. And in terms of the rubbish, Down is a contractor to mow the lawns, and then the Mangawhai Cemetery Trust look after the cleaning and rubbish. So my staff will basically have a conversation with them if that is lacking.
Yeah, just on the tree line, you can just see there's like an old rusty petrol container and different things that have been there for a while. So I thought I'd just bring it up.
Send that to them.
Once we get that up, Mr. Mayor, we'll just go on to Wood Street. Yep, that's right. So look, I thought it's important that we did have a bit of a briefing on Wood Street, because there's been quite a few moving parts in conversation with council, but also the community. So I think it's a good time to get everybody on the same page. So I've got Tim here, and maybe what we do, Tim, is we just walk through from Molesworth right around and what the overall intent here is.
Right, in terms of the Wood Street design, basically what you see there is it's still a one-way system. It is slight narrowing to create more parking on both sides and loading zones. And a key aspect is central area here is waste. So the central area between the two groups of commercial properties is raised one level, and we do have a boardwalk design around the outside of the park. Just to give it, it's the same sort of look as up by the Mangawhai Heads, same material, Vitex boardwalk. So just ties in nicely with and feedback we've received. So those are the key elements on Wood Street. Also incorporated under the ground for this is the new drainage. So considerable pipes been underground going into the golf course, and that covers all the commercial area and the water coming down Allen Street. The roundabout shifted over quite a bit to actually make it a bit more usable as a roundabout compared to the current temporary design. So this curb line on Allen and Wood Street comes over a little bit towards the to the east. A two-way road going through the old fire station site with parking on both sides and loading. That's the key elements of Wood Street, and incorporated in there also is you'll notice a lot of gardens. There's a lot of rain gardens. This is about treating the water before it goes into the golf course. So while it doesn't 100% treat it, it definitely is an improvement, and we have an attenuation pond in the golf course. So that's a bit of a summary about Wood Street. You'll notice the entrance is tightened up a bit. That's all about one-way traffic. So then if we go to the next slide.
Okay,
go back.
Thank you, Mr. Mayor. Just a question on this one. So the golf course, I'm just thinking, have you assessed the capacity of the golf course to take what kind of stormwater discharge from here? And we are also looking at the wastewater discharge. So, I mean, what do you think is going to be golf course, or is it pool of water?
Okay, through you, Mr. Chair, so that we've done an analysis in the background with AWA, which a company that does stormwater modelling, and our aim is to have a zero impact. So we may, the pond size may increase a bit. We're talking about that with the golf course. And also we're working with looking at the actual wetland in the golf course, getting a consent to enable us to maintain that a bit better and also clear the outflows a bit, which means more water can go through. So the output we're trying to achieve is a zero impact from the stormwater into the golf course.
No, my question is practical. If we have more discharge, regardless of how much pond you have, do we have to deflood that whole place? Because you don't know how much rain gonna come, you don't know how much stormwater gonna come. Manga 5 was flooded last time. It was even the Browns Road, whatever thing was flooded. So how can you presume this will take all the rainwater or whatever it comes?
Through you, Mr. Mayor. So what Tim was saying is that we've had some modelling and we generally allow for a 1 in 10 year event. That's normal design or hydraulic design. Anything over and above that, we don't cater for. So if the detention area won't cope with the 1 in 10 year storm, it'll go overland, and you'll find that half the golf course will be in the same position as well. So that's the impact from Wood Street. You're talking about the wastewater. We've got a specific area that we've identified at the golf course fairway, which we've done quite a lot of testing, and the results show that it's a good area for soakage. But we'll also capture what doesn't get soaked away, and the intention is for the golf course to reuse it, or it'll go through to the wetlands. So there's sufficient capacity there for what we call normal events, so everyday rainfall. We can't cater for the storm events that occur.
I would suggest having a second peer review from a consultant before we go ahead with it. Thank you.
Through you, Mr. Mayor, we've done a peer review of that. So,
okay, thank you for that question. Councillor Larson.
Oh, thanks. Yeah, thanks, Adam. Just with regard to that Allen Street shoulder as you go up the hill from the roundabout to Findlay Street. One of the big complaints we've had from residents there is that all the water runs down and gouges it out. Are we going to be able to treat those edges as part of this?
Through you, Mr. Chair, yes, that's part of the design, and potentially we're looking at doing that very shortly for the maintenance contract.
Oh, yes.
So that may be happening in the next couple of months. So that involves a swale, an edge beam and a flow.
But it's not actually going to be curved and...
it's not going to be a curve, no, it's going to have a...
concrete swale.
It's what it has, look on the drawing, it's hard to tell, but there's we're going to leave a grass swale, soakage, that'll be shaped so the water goes into the swale, and we'll have a concrete edge beam. And the water comes down soakage, but also comes down to the bottom, which will eventually go into our stormwater system. So if we do this now, this work through the maintenance contract, obviously there won't be a stormwater system for it to go into, so it'll flow down to the bottom. We'll still have a bit of an issue down the bottom for a period until that stormwater system goes
up. Okay, thank you.
Thank you, Councillor Howard.
Thank you, Mr. Mayor. Two questions. Are we, with that design and now with the parks and the gardens, etc., to capture water, so we're getting rid of those concrete round things that we've had, the tanks, which have been, the annoyance of some. So that's the first question. How are we doing that? B, have we had really good discussions with all of the property owners? And because, various people talk about doing different things and what they'd like to do. And we know, for instance, in the corner there down to Fagan Place, there's a lot of discussion going on. Really, the owner of the site is now the service station and what might happen there. So I'm just projecting ahead. Have we taken into account anything that they're prepared to talk about developing at this stage?
For you, Mr. Mayor. So the first question in terms of yes, those tanks will be removed. ironically, we are considering using some of them part of the potential playground shift, because some of them have those nice wooden seats on the top. So there was a plan to do that, but saying so in terms of the second question, yes, there has been a lot of consultation and invited various members to the various workshops, which sometimes they can't make it. But in particular, conversation with James, the owner of the big commercial property that's shown on the screen there as Harcourts and etc. Even though I've shifted, but as recently as yesterday, I was corresponding with him about some recent. We do have some actual concepts of the playground, so I was consulting with him about his ideas around this and how it fits in on his designs. In terms of liaising with Steve Lay, who's the owner of the corner property of Fagan with the petrol station, etc. There has been a lot, but also acknowledging that he's a bit uncertain about what his future property will be. So there has been a lot of consultation.
Okay, that's cool, that's cool. Looks good to me. Oh, I think you've really covered off that you may well be doing the footpath, etc. on Ellen Street, really, possibly.
Yep.
But, that is, I think that to Councillor Larson's point, will certainly tidy up the issues that, many of the residents have been concerned about down there, and the safety factor.
And in terms of Allen Street, just to clarify, there, it would be shown on the drawing here. It would be, most people can see that's what I'm pointing, but it's to this driveway here before the sort of black seal works, because it's a lot more complex once you start getting down outside Wood Street Pizzeria. So it'll just be the footpath for that point there. So where the footpath angles back in to the road is where it would be to. Yeah. In the short term.
That we talked about when they're going across Allen Street there, where the footpath stops, where the gap is, that's the entrance way into the back of all the commercial properties, right?
Correct.
Yes.
I'm sort of conscious of time, Mr. Mayor, so.
Councillor Lambeth?
Yeah, excuse me if I've missed something along but the Wood Street development, if you could just confirm with me, congestion problems, water pipe reconstruction, flooding problems, is there an accident problem or crash problem there or danger to pedestrians, or is it beautification only? What is the above?
Yeah, through you, Mr. Mayor, all of the above. So there's been congestion issues, pedestrian issues, water and flooding issues, but it also is an opportunity to actually beautify it because it is in need of beautification.
Thank you. Just to confirm that, thanks.
Okay, move on.
Right, what we have shown here is the original design for at the back before considering shifting the playground. And so this, just wanted to show this aspect, which allowed access through the old fire station site on the right. Not necessarily the most ideal of flow, quite disjointed and still quite confusing because we still notice a lot of people that use the, come out the back of the car parking behind Gringers, etc. A lot of people don't notice that back car park area. Even if they put big signs up, they probably still won't notice it. So this is an opportunity, well, this is what was proposed from the small workshop we had in December. The output was change the layout so you can shift the playground to behind Gringers and the traffic has to go in, it has to enter the car park at the back. So it gets a nice simple flow. It's a really big improvement in terms of actual the width of the road through the area. It means we can have trucks come through and we've created a lot of good. In the yellow there, you can see the loading zones on both the old fire station site This means trucks can come through and load directly to those back shops where previously they are parking Fagan Place, and it really is blocking the road. So that would be a great, it does take up a lot of parking, but I think it's necessary. It also potentially allows for a future closure of Wood Street if that ever happened at times. There's talks about doing it maybe just in the evenings or the weekends. This would be a lot better. The turning circles for the trucks can be accommodated through this. Now, since preparing this presentation, we've received a concept design back from the playground. That car parking, the playground area shown in orange there can be reduced slightly if you add parking on the Fagan Place side. It adds some maybe 30-degree or 90-degree parking. You can achieve more parking and a slight reduction in the, it would reduce the playground, but you can still achieve in the proposed. So we've had a look at that. And also you can notice a big green area shown by the parent parking. That's to allow for potentially a future toilet block. And we had 77 people provide feedback for this design, and a lot of the people commented on the need for extra toilets there. So I realise there's not budget for that at the moment, but that could be in the short term be converted, put into parking. But of course, once you put parking in, if you take it away, people get angry. So
material was that for the toilets?
The toilets are shown in the
pointer.
Yeah, just those on
Next to the handicap parking there.
next to the handicap parking, and there's a green rectangle there, just there. So the in the actual concept design we've received, it's actually shown as there's a lot of seating shown in this concept design, which is basically creating another area for people to go to. So the actual playground component is not that huge, but tables and umbrellas and things, that would become another sort of area for people to socialise.
I can send that out to elected members.
Yeah.
Great.
Thank you, Mr. Mayor. Just a quick question. I'm not very familiar, but is it where the car park is? Is it on the left? Is the Foursquare as we start? No.
No. So
Foursquare.
So Foursquare is not shown. Foursquare would be in the bottom left-hand corner down about here.
Okay, it's not part of the project.
It is part of the project. Well, the project's broken into three aspects. You've got the stormwater component, you've got Wood Street, and then you've got an area at the back which is we're struggling to get NZTA funding for, which is this back car parking area.
And the Fagan Place pensioner is after the senior citizen, is it?
Yes, that's
on the top.
On the top, basically where it's written as yeah.
And they have been consulted as well.
In terms of the residents, you mean, or the
residents? Yeah.
The residents. I mean, this has been out for public consultation.
Okay.
So everyone, not specifically to.
There will be detailed consultation if we were to proceed with the works.
Okay, so look, we're getting pushed for time, fellas. I think we'll move on from that. If there's any questions you'd like to ask Tim, stick it in an email.
Hello. Before we go back to Bernard, who's patiently waiting for us, can I just clarify, this project, 26, so we just, in the previous item, identified it as discretionary spend that we're taking out, pushing out further beyond this 3-year LTP period. So that's what we're incorporating in our budgets, just making that very clear for you all. Well done.
Thanks.
Okay.
Lunch break, no?
Go first.
No.
Yes.
I'm going back to that particular.
Yes. Okay, Bernard. Just get your thing up on the screen.
Rotate it. Just pick up the computer, Bernard, and open it.
I need to rotate from mine just for a second.
Oh. Usually.
I've got this Joel spraying me, so I have to try.
Yeah, yes.
Shit, that didn't work.
Oh, God. I think we should take a break, take some time.
Kelly, is it possible to turn the temperature down a little bit more?
I'm gonna stop sharing and then share it from here.
You got a good spot there. You got a good spot.
I have to get my neck frozen.
Over there.
It's like everything today, it's going over the top of you. Oh.
For those online, we just got a new TV screen to try and give us access to provide views of you as well as the presentation. So we're just working that out to see what we can share.
I'm gonna have to drag that one down, drag that one up.
Why don't we take a lunch in the meantime? What is time?
It's supposed to be up there very shortly.
Then you can go up.
You're hungry, Ash?
No, I'm just thought, make use of every minute
Yeah,
we have. State pays money, isn't it?
There you go, we're in.
So, it's gonna bend down. They won't be able to see online just
So
yet.
this is the intersection of Garbalino and Tara, and then it carries on through to the intersection with Cove Road, right?
I'll try and get online, I've seen them.
Right.
Yeah, that's
Oh, there's a good leader on the right.
Just same the roads.
Let's share now. Smoking.
So many.
It do. Oh. Break it in plan.
Yep. So we have just turned the orientation of this drawing to make it a bit clearer for you to see. So your northern is actually that way. We've got Cove Road here intersecting with Tara Road continuing down to Kaiwakamanawai, and Garbalino Road intersecting here. Now,
So if you've got a couple of people online too, just it's like,
yep. Now, I just want to kick off by saying I am not a traffic safety engineer. I have been partial to some of the conversations and around this layout and other proposed layouts, so I'll try and speak to that as best as I can. Now, the idea of shifting the power pole and cutting into that bank, that's been floating around for some time. I looked at it and provided a price for it about 10 years ago when I was on the contractor's side of the fence. It is a feasible solution. It is going to provide some sightline improvement. The issue we have at this intersection, however, is we are limited to space. We've cutting this back. We've also got limitations to people crossings. Our traffic safety engineers, along with Waka Kotahi, keep in mind the work we're doing here at the moment is part of the 100% funded package. So Waka Kotahi have been part of the conversation. And the conversations with our project manager looking after this site have been around assessing the horizontal geometrics, so in particular the longitudinal slope The fact that the road actually slopes away from that intersection and the traffic speed means that simply cutting back the embankment and shifting the power pole still isn't going to achieve the safe sight distance requirements to really remove the risk that we see at this intersection. So we've looked at other options of how we can actually remove that risk altogether, mitigate it as best as possible. And the solution come up with is the change in priority flow for the whole intersection. We have enough space on site already to achieve this change in intersection layout without doing any extensive works. We've assessed the crossing of the Crown aspects and things like that on site, driven it using a number of tools. And the whole way the intersection is currently formed is actually quite good as far as, the proposed layout. There's really no reason for us to change anything as far as the actual pavement itself. So it's a fairly easy, low-cost solution that'll further mitigate the risks that we've got there. It also, just going back to some conversations that have been had over time now with regards to council's LTP and considerations around the freight transport route into Mangawhai and the back of Mangawhai Central. It also changes that layout flow to better suit the long-term plan as far as that transport route is concerned. As far as the State Highway detour, the other improvement, of course, at the end of Tara Road, Kaiwaka-Mangawhai intersection, we also have a very complex intersection with safety risks as well. So by undertaking these work, changing that priority flow through Garbalino, we're addressing one intersection and reducing the risk at another. So that's where we're at with that. That's proposed for implementation on the 12th.
Councillor Lambert, followed by Councillor Lars.
Thank you. Through the mayor. You talk about risks, traffic crash data. How many crashes have been involved here?
Through the chair, unfortunately, I can't respond to that, but it's not, just not on the top of my head, sorry.
Would that not be one of the first considerations when you're looking at the risk of an intersection? Because quite often a tricky intersection will cause motorists to slow down and behave better. Sometimes by opening it up, it increases the speed through there. Surely that's part of your risk analysis to work out what crash rate there is.
Yeah, through the chair, certainly these are considerations that are taken by our traffic safety engineers. Unfortunately, I can't speak to the exact process. It is not my area of expertise.
Councillor Lars.
Thank you, Your Worship. Yeah, just very quickly. What was I going to say? Extremely quickly. Carry on.
What it is?
Forgot it.
Have a hard weekend.
Yeah.
Councillor Howard.
Could you just confirm that land on the right there, of coming up Tara? So that whole area is, no, on the other side, where the house is and all that, is that part of Mangawhai Hills land, or is that just privately owned?
Through the chair, we do actually have a fairly wide road corridor through here. So part of that is designated land parcel.
Yes.
Road councils, yeah, apologies.
And going right down to the corner?
Most of the way down, yes. I haven't looked myself too far down, but yes.
Councillor Larson's regained his memory. What was it?
Come back now, just very, very quickly. So just with the diversion, they're coming in Inslee Street. Are they being told to go up and around Garbalino Road to divert, are they?
Correct.
So they can't actually go into Tara Road, or is it just say residents only or something?
Through the chair, we are not putting any signage in place to that effect as far as residents only. However, the designated detour route that will be signposted puts them up to Garbalino intersection. Yep.
So they could go through there and then get all backed up at the intersection there all the way down the hill and go, I shouldn't have come this way.
hopefully they only do it once.
Some way to look at it.
Councillor Williams?
Thank you. Just further to that. So when they come in Inslee Street and they turn left, they're going to, the detour route is Mangawhai Kaiwaka Road, straight up. So they're not going to go Tara and up and around.
Just through the chair, point of clarification, the Brendu and detour route doesn't actually, it isn't designated through Tomarata Mangawhai Road. It is up to Kaiwaka and in Kaiwaka Mangawhai from there. But we are improving signage throughout the overall.
Okay, too. Yeah.
That's how.
Thank you, Mr Mayor, because it's patently obvious that the roundabout that we've got here, you know, there is an awful lot of backlog coming in into it. So I think that's very good to hear.
Yeah.
That the designated route is Mangawhai Road.
Through the chair, and we continue to promote that, and will continue to promote that. Just another just point on this layout change. We are looking at putting VMS board signage in place. There are intersection layout change signage that will be in place as well. So making sure it doesn't come as a surprise to motorists the day after the 12th. They'll have plenty of advance notice that the layout is changing.
Okay, that'll do. Move on. Thank you.
Thank you.
Ben?
Okay.
So, Mr Mayor, we've got one 10-minute item with Sue that we could do, and then perhaps you can break for lunch.
Break now.
No, just do Sue's 10-minute item.
Yeah, we're just going to do one more item before lunch. That'll be Sue on LTP revenue and finance policy.
Speech with them. And that poor bastard on, he won't be able to get in Australia. Yeah. Just got on Google here, but much road reserve. Change. Down on the other side of the road. Yeah. Evelina Road.
Sorry, it's not really concentrated.
Yeah, there's not much here.
Okay, so this is just additional items that we hadn't discussed in the revenue and financing. There were a couple that I found smaller activities that have been left out and I thought should be there. And there were also the three waters that obviously we have to bring back in. So the first on is pensioner housing. So this is basically it's funded by fees and charges, by rent, and that's by rentals to the pensioners, and we provide 100%, so it's not a burden on general rates. The next one is to do with economic development, and that's because of the emphasis of council on economic development. The funding for that is general rates, and at the moment we've got 50,000 in our long-term plan per year against that activity. The next one was as a result of last month or a couple of months ago, we had Dargaville and Sportsville come and talk to us about having a targeted rate. And so I've now had to add that into the revenue and financing policy. And that's obviously a targeted rate. And we're asking, that's one of our consultation questions, whether they pay $7 per property or $17 per property, I think it is, but that's going to be in consultation. On solid waste, I put that in, I think I just had to clarify that from 2025, the targeted rates that we would be proposing would be on those properties that got the benefits. So actually had the bins. I was just clarifying that. And then we get down to stormwater. So these are new. So this is obviously a high benefit, and I've just put in I put the funding that we've that's been proposed in the past, and that's targeted rates on land value, 90% and 10% general rates. With water treatment and supply, that obviously is a targeted rate as well. It's part targeted rate for a fixed charge and part water by metre. And you can see that, and there are some fees and charges because Fonterra pays slightly different fees and charges than just the water by metre. And you can see that we charge those properties, i.e. empty sections, that could be connectable, 75% of the full charge. With wastewater treatment, that obviously again is a high benefit to those people that are flushing the toilets. So we have some fees and charges. The council, previous council decided 5% should go towards the general rates because of the fact that we have I think public toilets around, plus the use of public toilets, plus the benefits that accrues to people through actually having a public system and that your harbours are clean. So primarily though, it's targeted rates, and it's equalised to target rates 95%. And obviously sections also get charged 75% of the fixed fee. So I think the questions I had about this was, what does equalise mean? So for both water and wastewater, what we have is one charge over all the communities that would have those charges. So for example, in wastewater, all the costs are added together and there's one charge for all the communities. And for water, it's the same charge. So we don't charge by community. And that was, that came in last LTP.
Sorry, just a question, Mr. Mayor.
Councillor.
Thank you. Just a clarification on this. So that Mangawhai wastewater still goes on with that 95% generalized charge to the whole of Kaipara, or what?
Yes, it does.
So when is going to stop?
It's not, because it's equalised now. So all
That's what I'm
charges.
asking. So
Yeah, all charges. So all wastewater charges for all communities are added together and divided over the number of residents.
it's totally against the targeted rates we were proposing in the past.
No, that's the same targeted rate. I mean, that's this is the past. This is the past, and I bought it now forward. If you want to have a discussion about it,
Like have a
the same for water. Well, it's the same for water, but I've got a short time frame. I've got to.
No, next time, but we'll talk about it.
Well, next time I'm bringing you the final revenue and finance and policy.
Thank you.
Okay, so water's the same. Dargaville is the most expensive in water at the moment, and that gets equalised as well. So we realise that there are ups and downs with communities. Okay, so that's my presentation. If there's no further.
Thank you.
Oh, hang on, there's a couple of, the penalties. So the other rates I just wanted to bring to your attention and show you a bit more about is the library and parks rate. Because this is we talked about this being a targeted rate, and I've gone back and tried to work out, okay, how, with Christine, how we actually end up showing it. And our rates, our general rates at the moment are split between those properties under 2,000 square metres and the rest of the, basically rural, the rest of the rural areas. So, but when I looked at how they were split, you can see there's still pink dots in the rural areas because there's a whole lot of sections under 2,000 square metres that are actually in the rural. So we looked at how else could we split, or how could we target the rate for parks and for libraries? Because the issue was that this council was worried, or that it had people questioning the fact that the rural community were paying more for libraries and parks that they may not use. So I looked at, this is our roles, and if we just take the areas and around the main towns. So the roles around the main towns of Dargaville, Whangaparota and Kaiwaka and Mumbai, there's roles around those. They would be the ones that we target. And just to show you the difference and what happens when you do that. So previously I presented to you, and I know the costs are changing all the time because we're reducing them, but I presented to you that what this would mean to the residential would have been the cost of $391, and then other would have been $262. When we look at it based on roles, which better define the urban and rural, you can see it's a bit higher, and that's the split of 60-40 that you agreed for me to look at. So if you think that's too high, one of the things we are looking at is whether we bring the parks costs down, because obviously there's been a huge increase in the potential budgeting costs, or whether we change the split.
Is it?
On.
Councillor Howard?
Thank you, Mr. Mayor. So thanks for, on that, if we did 70-30, do you have a sort of an off-the-cuff idea on what that would change?
Saying that 70% to the residential properties, so putting that $580 up more.
It put up.
An increase it more.
Because at the moment.
Yeah, there's more of it.
So we did.
5.2 million.
What you did ask me in the beginning to go is to find out how many of the people were registered rurally as users of the library. And what I actually found out was it was 65-35 split. But I brought that to you and you said, okay, and it was quite hard to find, but you said, well, okay, no, we're still happy with the 60-40. Okay?
65-35 residential rural.
Yes.
Councillor Vincent?
Thank you, Mr. Mayor. I think we should be guided in the first instance by the principal, and then if the numbers are uncomfortable, we'll then address the numbers. So I'd stay with the 60-40, but maybe look at that 5.2 million as an area that we need to put the blowtorch on. So my thought. Could I also ask a couple of questions?
Sure.
I did have a question about.
Can I be rude here, but
go.
Councillor Aaron Wilson had a hand up before you. So, away you go, Aaron. You go in first, please.
Oh, thank you. Yes, so thanks very much for doing all this work on this. And I was one of the EMs that was wanting to see this information. But I'm actually wondering now if our urban population actually isn't large enough to take the brunt of the cost itself. I mean, just looking at the difference here, the increase in residential far outweighs the decrease for the rural. I mean, they're looking at a $50 decrease, but it's a much larger increase for the residential, yeah. And with everything else going on, I'm actually having second thoughts about whether now's the time to play around with this targeted rate. That's my thoughts based on what you've presented today. Thanks.
Okay, I think just to reflect, we had Stephen Fry, I think his name was, that came to present with us and showed that we really didn't have that many targeted rates. We were one of the lowest, and that councils were actually moving to that because of the burden on the farmers. I mean, that was one of the biggest things. So, yeah, take on board what you're saying, but I'm not sure I'm going to come back. So my intention is, unless I'm told otherwise by the majority, I'll be coming back with a targeted rate.
I appreciate that. Just trying to get everything together as, with all these changes. Thanks.
Okay, Councillor Vincent, followed by Councillor Lambeth.
Thank you, Mr. Mayor. Firstly, I did ask a question about, is this going to be subject to a consultation process?
Yes, it will be.
So I mean, that means we could get submissions saying one thing or the other regarding that very thing. So that could affect the final result. The other thing too is just in the format of, we'll no doubt get your table back another time. Could you just put the actual subgroup heading bolded, just so it's, I found it, I think it'd be a bit easier to follow, so that when you're talking about solid waste, that's the activity heading, and then within that, you've got the other, and just differentiate the heading from the activity.
I can do that.
Thank you, councillor Lambert, followed by councillor Larson.
Just to add to this, I don't know if you're aware, but 2 communities have started up their own libraries outside of the Kaipara library system, that being Te Kaupuru and Tangaroa. So they independently look after their own libraries. So just to throw another thing into the middle.
Okay, thank you, councillor Larson.
Oh, thank you. Are your numbers based, please, on properties, the number of UAGCs that are paid rather than the number of total rural titles? The point I make there is that where farms operate under multiple titles and pay one UAGC, it would be pretty horrendous to throw this targeted rate onto each title.
Correct. So when we did the modelling, we made that we only chose properties that have the UAGC, then determined if they resident or other.
Sure. It's something more. All right, let's have a break for lunch.
Helen,
Hang on.
Hang on.
We haven't quite finished. I know, you're plenty right, because we just pushed.
Away with it, sir.
We did want to talk to you about the penalties. This has become more important because of the fact that we've got NRC who adopts our penalties and our charging basis for when they're going to receive rates and people are going to pay rates. So they need to understand, because they're adopting their annual LTP prior to us. So we need you to just give us a determination on penalties and what you actually want. At the moment, we currently apply a 10% penalty, and then 6 months later, or on 1st of July, another 10% on top of that.
And 10% on every instalment. So we do the maximum. I provided the.
Yeah, so there's a table there. So
what we do and what others do.
Yeah, so we do the maximum, and you can see we do, that's what most people do. But last time we talked to you, and it wasn't September, but you said you would prefer that it was only 5%, only apply the rears once, I think.
But it wasn't clear what was being said, so I just needed to determine.
Yeah.
Okay, councillor Nair.
Through the chair, I would like to, in terms of feedback, to have that instalment penalty of 10% and not have 2 further penalties, as you have seen. They're twice more than, and most of them are irrecoverable. I will need some figures on that. I think it's a waste of time and also doesn't cause us any good. Thank you.
Councillor Howard.
Thank you, Mr. Mayor. I think I did raise a question about the significant jump from the individual instalments to the 800 further penalty, which is in July, which is ahead. And, you know, I mean, I want to take a view of being, you know, fair to our ratepayers when it comes to this situation. But am I correct? We do have a rates remission policy where people, they're having hardship, that they can come to council and work through a plan. So these really are for people who still operate outside of working with council to come to an agreement. And I'm a bit torn, because whilst I want to be fair to people, I think that, you know, if people don't want to use our facilities, well, and don't pay the rates, well, there is a cost for that. I tend to agree with councillor Nair that, you know, maybe certainly the 10%. I just wonder though, you've given us a good overview of other councils, but, you know, is there another way of doing this? Because it is sledgehammer, and I don't know, none of it sits really comfortably with me.
Councillor Larson.
Thank you, Your Worship. I guess there are payment arrangements that people can make if they front foot these things, but I don't know that I agree with what I think Councillor Nair is saying, that a 10% and then nothing further would work. Would it be from a recovery perspective, if there's no further disincentive to people to then pay, they won't. That's why we then go, maybe you do go 10%, then 5 and then 5 or whatever, but if you don't have any further trigger, they go, well, I've paid my penalty, it's been accrued anyway, so I now just won't pay at all. I think you do need a further penalty to make it even worse if you don't pay, despite the fact that it is draconian.
Councillor Lambeth?
I believe the average interest rate now is around about 8.5% for rural properties, and if they've got a $50,000 rate bill, if we don't carry on with it, then it becomes the cheapest form of borrowing money from the council. And we've got to make sure that we don't fall into the trap of being a bank, where we offset the debt from some of the. It's a business decision by them, a lot of them, and it's just a matter of balancing the books for them. But we've got to make sure that we don't just charge the 10%, because then it'll be abused by certain businesses.
Councillor Nair, followed by Councillor Howard, is it?
Thank you, Mr. Mayor. It's not a business decision. If you look at the number of councils who are, I would say these, what is the recovery percentage of these two further penalties? I'd like to know. Very much so, they could be, I shouldn't say that, but one of those who are not paying any rates. It is an exercise in futility. So I would like to know how many people pay those further penalties, because if they were to pay, one penalty is good enough. Why? What's the incentive or disincentive, coming to Councillor Lambert's point, to pay another set of 10% penalty because it's cheaper? It's not.
So through the chair, we do, the amount of penalties we charge, we remit quite a number of them, and we
that's what I'm trying to say.
Probably get up to say 300,000 of actual payments that we take each year in penalties.
But all I'm trying to say is, I mean, this is an exercise. We are not doing any favors to the ratepayers. We are trying to skim some people who don't give a shit, about the penalties. But is it how we wanna serve them? 10%, I would say, is a good call on $4,000, $400 penalty. And if you're not paying, you ask for rate remission or arrangement or installment, which is a fair way. Why we should try to say, I mean, if the people are not paying, the people will never pay, those kind of people. I'd like to know some figure work on that before making a decision. Thank you.
Thank you. Councillor Councillor Wilson. Collins.
Thank you. Yeah, so I'm happy with the but so sorry, just to clarify, this is what we're doing now, isn't it? The 10% penalty and then the further
10%. Yes.
10%. Yeah. So I'm happy with the structure that we've got in place now. I've seen the work that the debtors team has done in actually engaging with people who are unable to pay their rates, and I understand. And I probably have a bit more of an understanding than some of the other elected members through my day job as well, that yes, we apply the penalties, but a lot of the time we're actually able to work with the residents and get those and get the rates paid and the penalties remitted. And I think, unfortunately, when it becomes a debt collection situation, sometimes you do have a bit of a rod and a carrot situation that you've got to balance. And I think that our staff have put in place a lot of processes and policies internally where this is only one tool, but they're actually doing a whole suite of work around this tool to be able to get the best results for those people that are unable to pay their rates. And it's not just a case of, oh, we're slapping penalties on and we're being hard about it. I think it's just we have to put this tool into place to allow the staff to then work individually with those ratepayers that are really struggling. But at the end of the day, there's always a very small percentage who do need this sort of penalty to be able to impress upon how serious it is that we actually get the rates collected at all. And of course, even beyond this, there's even further tools with that can end up very serious through courts and things for debt collection. So yeah, just to provide my feedback and possibly a bit of a bigger picture to what this relates to. Thanks.
Given that no system is ever going to be perfect, which is the nature of a lot of what we do. And so the system we've got now, I would ask the question, if it's not broken, don't fix it. And it's giving us, I'd like to ask Sue the question, is it the system we've got, is it generally working well for the council?
Yes, we get, we get them, some monetary compensation for those who aren't going to pay. And especially when we have to pull it from their bank accounts, and we do that sweep once a year and we get the penalties. And then it's a really good actual, I suppose, when we do have people approaching us, the fact they're going to get their penalties, could get their penalties credited if they keep up payments. They feel that they're benefiting from it as well.
Thank you. Look, I'm going to wrap it up there. I think if you want any more questions, send them in, but that clarifies the situation pretty well for me. Lunchtime till when?
For those online, lunch till 1:45. Hello, everybody online. Just letting you know that we are going to be starting soon. We're just waiting for a few people to come back.
He's not even looking, Pera.
Okay, welcome back. Okay, we're going to jump a couple of items.
Port Norton.
We can work people that are here that need to be able to present. So the first one we are going to is the,
Sport Northland annual.
Port Northland, sorry, yeah, Port Northland.
Oh.
Annual report. It's on yours, not mine.
But we were on this. Now online.
Okay, welcome Stu, Scott. And who else is online?
Anna.
Anna, thank you, Anna. Okay, where you go?
Yep. Kia ora tātou, ko Stu Middleton Te Kuangoa, ko Spaces and Places, Sport Northland Mahiana. So on with Sport Northland, we've got Anna on the screen who will actually kick us off, but we've also got Scott from CLM who will just introduce himself to start with.
Kia ora tātou, ko Scott Te Kuangoa, work for CLM, obviously, regional manager, Māori support manager. Kia ora.
So kia ora, we've got two sections to this report. Anna's tight for time, so Anna is online. She's going to kick off and report against our community space, and then Scott and I will report against the Cody Coast Community Pool and take questions for that. So I'll hand it over to you, Anna.
Kia ora koutou, ko waiaho, he Scottish aho, no wharawhiwhi aho, kei whangarei tukukaina, he Active Communities Manager mō Ho Sport Northland, ko Anna Markwick tuku ingoa. Kia ora everybody, thank you so much for the opportunity to present to you on some of the mahi that Sport Northland has achieved.
Use the language that most.
For some of you, you may not know that our vision is all Northlanders moving more for enhanced wellbeing.
Frozen.
Lost her.
Sorry, what was that?
Anna, you're back. We lost you for a couple of minutes, seconds there, so keep going.
Sure thing. I just said what our vision was. Did you all capture that?
No.
So our vision is all Northlanders moving more for enhanced wellbeing. And we understand through our work how we contribute to that. So that's through being physically active and having positive experiences. That's the piece of wellbeing that we're going to take ownership of, because that helps people have a lifelong love of moving. Moving on to the next slide, all of our work that I'll talk through contributes to building great communities for where people live, learn, work and play. And we have a number of staff working in the Kaipara district where our role is to empower and support people on their journey. We support 4 secondary schools and a range of sporting events. And we also work alongside these schools to help them understand what their students like and help them to offer those opportunities, as we know that not all teenagers are into sport. We support 14 primary schools with their school environment, and that's to create a more physical activity and positive, healthy eating environment so that it's easy for students to learn and thrive in. Given our significant geographical location, we're also working in all of the Kaipara primary schools delivering Water Safe, and that's to teach students to be safe in, on and around the water. You might be aware that we've organised 3 events in the Kaipara district, and that's to cater for families and individuals of all ages and abilities also. And the range of outsiders outside of Kaipara attending those events varies between 18 and 25% of our participants. We have a range of community services that are also offered to support people on their physical activity journey. These include green prescriptions, so if you were to go to the doctor, they might give you a prescription that connects us with us to help you on your physical activity journey, as opposed to giving you medication. We work with workplaces, which the Kaipara District Council has been a part of in the past, given that we spend a lot of time working, and that's to support workplaces in creating a more active and healthy environment. We have a Strength and Balance initiative, and this focuses on working with exercise providers to develop and deliver group strength and balance classes appropriate for people aged 65 and older, and that's to help them reduce the risk of falling so that they can remain independent for longer. Also continue to support with facility development, and at the moment that's Sportsville Dargaville and working through stage 2. This happens to be a prioritised project in the Kaipara Spaces and Places plan also. And then a big part of this, the work that we do in the Kaipara is the work of our community connector, who is tasked with what we would call the local play active rec and sports system, which is just a whole lot of jargon, but essentially it's about working with prioritised communities who have lower levels of physical activity and positive experiences to help understand what their aspirations are, work with those existing strengths and assets in that community, encourage a lot of people to work together to make things happen and support that and build diverse and, collective leadership there. Lots of areas of work that we're working in, and there's one initiative that we would love to deliver in the Kaipara, which we hope will come to fruition in the future, and that's our Bike Ready initiative, which we are currently implementing in the Far North and Whangarei areas. That's a free cycle skills training for children and adults to learn how to ride a bike and how to ride safely on the road. And the Kaipara district is absolutely primed with some wonderful cycling infrastructure that would align well with that. Are there any questions on this aspect of Sport Northland before I hand the time over to Stu and Scott to talk about the Coast Pool?
Councillor Naya has a question, Anna, and there's Councillor Vincent after that.
Is it, I can ask about the report you gave, or has to be some specific area? I was just having a couple of simple questions. One on the testing of hydrotherapy pool and the main pool.
It's the pool, so Stu will do that next. This
Oh,
is
that's-
part of the Sport Northland grant for the physical activity and support that they do around the district.
So you're just talking about the holistic picture?
Yeah, and Stu will do.
Yeah, Councillor Vincent?
Thank you, Mr Mayor. I've got a procedural question really here, because I presume that the purpose of this presentation is a finalised annual report, which we are being requested to receive. Yep.
And this is given oversight.
Well, this is not a decision-making meeting. Do we have to go through this again at a formal council meeting?
No.
I have a problem with that. Because I think we're sort of caught in the, I might be being pedantic about it, but I did sort of allude to it in my feedback on the agenda, in which I said, sorry to be doing this in front of you, but it's about you rather than to you. I did say that I'm not sure if all the items on the briefing agenda need to be there, e.g. the Sport Northland reports, which I would have thought need to be received and discussed at a formal council meeting. Not sure what difference it will make discussing it at a briefing.
Yeah.
And because at a briefing, my view is that the extent of our direction should be to suggest alternative options and indicate whether or not there is sufficient information to enable us to make a decision.
The three of us, Mayor, I'll take that question. So basically the intent, given how important the pool is to the community, the intent was to obviously have a far broader conversation today. And the annual report informs that. But you're right, the annual report will need to come to a council meeting for noting formally.
Okay, thank you. Please continue.
Okay, any further questions? Thank you, Anna.
Thank you.
Thanks, Anna. So yeah, we move now on to the Cody Coast Community Pool report. It's worth noting that this is actually a report on last season, and we're now halfway through the current season. I'm sure there may be some questions aligned to this season, which I'm happy to answer at the end, but I think if we just move through as the report that's been tabled, which is from last season. I basically thought I'd start with a bit of a history. I'm sure Gordon could probably provide something better than I can, but 2008, it was a dream to have a pool. 2009 was constructed. I think it was January, I put in my report, January 2010 it was open. The trust that had built it tried to run it for a season. It'd be fair to say that it was a difficult job, wasn't it, Gordon? They brought CLM in towards the end of that, and CLM have continued to actually manage it since that point. The trust owned it and oversaw the management of that up until 2018. They were having difficulty. I think that the trust had reduced to only about 2 or 3 people that were actually working at that time. Sport Northland agreed to take over ownership 2019, and we have then continued to own the pool and engage CLM to manage it since that point, so the last 3-4 years. That's just a basic background on it. I'm happy to actually take questions as we go if that's easier, or is it better to wait until the end, Jason, and just do it?
I'll go to the end if you would, I think. Yep.
So the next one was just the attendance. You'll see in the report that the attendance was quite low last season, just over 16,000. It's normally been well up to 20, towards sort of mid-20, 25, 26,000. We had last year, the weather was terrible. If you remember rightly, we didn't actually have a summer. It rained almost non-stop. We had a number of weather events with Gabriel coming through. We were closed for about 7 days due to that. There were multiple other issues that led to the numbers being down, but already this season we've seen those spring back. Do you want to add anything to that?
Yeah, no, I think that's correct. Like, it was a challenge with all the weather, really, outdoor pool. When it's, a storm, there's not many people coming to vacate the facility. So, yeah, quite a disruptive season this year.
On to the finances or income and expenditure. As Hayley actually outlines in her couple of KDC provide an operating subsidy, 358,000. We split that 316 for operation and about 42 roughly that we try to cover maintenance with. Both Sport Northland and CLM have been making a loss each year. It's sort of been getting larger and larger until last year that was about 75,000. So it's getting to the point where it's becoming quite a concern. We've looked at a few ways that we can try to reduce that. One of them was a proposal to council to actually reduce hours, which we have done this year to just try and pull the wage bill back. But there's some of the increases, and you can see in the report, insurance is quadrupled. Water is really killing us. For Scott and his team, it's everything from wages to chemicals to power. Everything is just skyrocketing. So we are getting CPI increase on that operating subsidy, but it's just not keeping up with the cost to actually run the facility currently. Maintenance or repairs and maintenance, and that's actually an image on the screen there of the chlorine tank. So that burst last year, and that has been out of order. We've been having to manually chlorine dose. So we've got 200 litre barrels that the staff having to do manually, which is not acceptable. We're looking at different systems to put in, but it's not easy, and it's going to cost us money, which is just an indication of an aging facility. So most pool complexes, the plant will last about up to 15 years, which is about where we're at now. So you start to see an increase in maintenance costs at around that 10 to 12 year mark, and then by about 15 years, you're really looking at renewing a lot of that quite expensive plant, which is what's occurring at the moment. This year we've had to replace quite a few pumps, and other systems. We're also having trouble with a lot of the plumbing, etc. So aging facility, increasing maintenance costs, and moving into a lot of renewals is where we're finding ourselves. Let's sort of finish this part off. The next one is just the risk register, which is exactly what I've just been speaking about. It's that aging facility, and it is the fact that it's actually starting to cost not just more to run, but more to maintain. And this is probably an area that Scott can speak to from his side in relation to what they're seeing on the ground in that space.
Yeah, like Stu was saying, this season so far we've had 3 of the 5 large circulation pumps fail, just come end of life. So that was a big sort of disruption at the start of the season. We sort of limped along, kept the facility open, but that's contributed to some struggles with water quality. But there's a lot of large items, like I think in the report, it highlights some of the things, 140K of stuff that sort of really needs to be done. Soonish on the facility. Yeah, so it's just getting to that time where it needs a bit of a investment to keep it ticking along at an acceptable standard, really.
So for ourselves, the risk leader, the cost of running it, the risk council obviously increasing costs as well, and the fact that I'm having to actually cajole CLM to come on board each year. You know, they keep on threatening that they won't. If that was the case, we'd be looking at how we could actually run it. Sport Northland doesn't hold the qualifications required to actually open the doors and run the pool, neither does KDC. So we'd be scrambling to try and ensure that opportunity stayed available to the public. So it's a real risk at the moment, just for the sheer fact of how much it's costing to open the doors and maintain it. So that's sort of the very brief, points to the report that we provided. There was a section at the end which I'll just highlight, which is something that's going to require future discussion. So we have just completed a Northland Aquatics Facilities Plan that was done in conjunction with all three district councils, and I believe that that'll be going to one of your LTP discussions. Now there is a recommendation in there that we actually look at the ownership of not just the Cody Coast Community Pool, but all three pools that Sport Northland owns. And this was something that was raised by the consultants. It's one of the few, what's the only area in the country where they've seen a trust like ourselves actually owning the pool. So they haven't given an indication of what should be done, but they've said that we need to look at how that looks in the future and where that actually travels to. So it'd be really interesting to delve into that and to explore what the future looks like, not just for the Cody, but for pools in general, in the district and in the region. So from there, happy to take questions on anything, and we'll answer as well as we can.
Thank you, Mr. Mayor. So obviously the financial report is not there. So what you're telling us, we don't know how much was the income, because you say it's still to be finalized, even if it's 2 years. It's 23, the last year before, right?
Has been finalized.
We don't have it.
It's just attached to the back. So it was the
financial report.
Yeah.
It says it's being finalized. The annual report is there.
I don't think it has.
Financial summary.
Yeah, the financial summary is on the very back page. When we originally submitted the report, it was being done, but I had some.
Can you send it to us? Yeah. And my questions are obviously, sorry?
There's a spreadsheet with a very in-depth financials, which you can also have, which have been finalised. On the back of the report, there's the one-page summary, just P&L.
I couldn't see it. I can't see it. It's all operational cost. So you said you get some money from KDC. I don't know, how much was that?
358,000.
This is a substantial sum of money. So we need to see that financial report. My question is related to the operations so far. So the one is presented here in terms of operations. Every third test, the pool or the hydro pool fails on whatever reason. We don't know, the tests are conducted by you or by an outside body. So 356 tests, it failed. And when it fails, the pool is closed. Do you know what I'm talking about?
So the hydrotherapy pool is failing.
I'm talking about both pools.
Yeah.
So you obviously test the water.
Yes. Yep.
And every third time it fails. So when it fails, the pool is closed. So there's no income obviously on those days.
No. So
you know what I'm talking about?
The pool's tested. So there's one set of the pool tests is done external. So that's your microbiology test. So that's sent away, and the independent comes in and test it. And then staff test the pool every 3 hours and do manual manipulations to the pool water quality, depending on what happens in those tests that come out. So I'm not too sure what you're.
Well, I'm talking about page, if you look at that, page 11, it says main pool, hydrotherapy pool, and then 72% compliant, 70% compliant, non-compliant test, 174, 182, total 356 times it failed. and corrective action, pool closed when non-compliance was tested. So if the pool is not compliant, you will close it, right?
Yes.
So which means no money is coming.
It could be closed for like 10 minutes, 20 minutes while we adjust the chemical level. So they do a test, the test fails, then they need to make adjustments to the water quality to bring it up to the certain standard. And then they can reopen it. So it's not closed for the day or closed for a thing, it's just closed while it's outside those standards. What we mentioned in the report as well is that last season we had the chlorine tank cylinder burst.
Yeah.
So we were doing a lot of manual testing out of buckets and drums and stuff like that. And that's a lot slower than historically it's supposed to be automated system. So whenever there's a fluctuation in the testing, it automatically doses and it stays within a certain standard. So we might do a test, if it's outside the standards, the guys might close the pool for however long it takes to put chemicals in to make it right. So it's not, yeah.
So if I ask you, are you happy with the way the pool is being run, operated at the moment?
I'm happy that the staff are doing the best they can with the current kit that we've got in there. So when a plant item fails, there's not a whole lot you can do. Like they're literally getting a bucket, scooping it out of a drum, running to the pool, pouring it in. Whereas it's supposed to be an automated system where if it falls outside a certain land, a pump goes on, the pool comes up to level. So I'm confident the staff are doing the best they can with the plant that we have.
But the chlorine tank has been fixed.
Okay.
It says the money.
I think he's explained it.
Yeah.
Councillor Paniora, you have a question?
Thank you. So my question tags on to Councillor Nair's comment, the report that you sent through to us from the 1st of July 2022, that the financials will be ready when they've been finalised by the accountants. I don't understand why financials for the previous year wouldn't have been finalised already. We've seen some unofficial figures which are quite concerning around the high operational costs. I take your point that it's running at a loss, but the council are spending a lot of money on the facilities being open and paying wages to staff. So there is a lot of money that is being taken out of the pools, but the quality has slowly but surely decreased over the number of years I've been going there regularly since 2016, and in the last couple of summers it's been difficult to even go due to constant closure of the pools, to the point where people don't go anymore because there's no certainty that the pools will be open. The quality we've mentioned around the rubbish that was still present from last season, about 1.5 months into the beginning of the season. So I would like to see the financials at another briefing before this even moves through to a full council meeting for a decision. It doesn't sound like there's any plan going forward. It sounds like more money is going to need to be directed at the pools. And if I had it my way on this one, it would be that the pools closes until at the end of the season, until we can come up with a viable way forward. Because it sounds to me like even more of our ratepayers' money is going to have to go towards replacing a lot of the big ticket items, and our ratepayers can't even afford to pay the exorbitant amount to get into the pool. And if the numbers are low, then why are we not reducing the cost to get in? The cost is excessive, and ratepayers are already contributing to that. So that would be one way to start to actually make some income. Yes, you'll be reducing the price, but overall, I'm pretty sure that you'll be seeing an increase overall in the revenue that the pools are receiving. This is not to takahia on any of the workers or kaimahi at the pools, but oftentimes there's no one at the door, or the FPOS isn't working and people are being let in free. I don't know how often that is, but again, that's a loss to our to our ratepayers who are having to foot the bill. So there's a myriad of concerns, too much to go into it here and now, but it doesn't sound to me like there's any real sort of plan moving forward. I'd like to see the financials, and I'd like to see a more robust plan going forward, where it doesn't involve asking our ratepayers for even more money. Thank you.
So just through the chair, I think that is actually my fault that I think I've attached the wrong attachment in as flagged, so I'll send those financials through to you as soon as we've finished here.
Out of interest, what is the fee for an entry to have a swim?
$5.50.
Thank you.
$5.50, is it?
Yeah.
That's how.
Thank you, Mr. Mayor. I suspect that in many places around the country, similar issues are being found, being experienced. So I would hope that we're drawing on, other councils and things for advice and for insight. So, I think that, as has already been mentioned, it's critical that we understand that there is a plan, and we don't know at this stage whether there's been an uplift in the uptake of people using the pool this season, which is infinitely better than last, no doubt. But is there, and I know that there's a cost factor, but there's been any initiative like, you get 3 or 5 passes into the pool by paying your rates, etc. It just initiatives to get that start, which is what we did, what we need to see. However, the plan will be a key element, I think, for us to see, to make sure that ultimately it is not just going to be a big drain on the council. And one point of clarification also, we say that Sport Northland now own it. So, but Sport Northland didn't always own it, the trust owned it initially, set it up and built it, not the Kaipara District Council.
It's on Kaipara District Council land.
It's on the land.
Councillor Larson.
Oh, thank you, Your Worship. Yeah, thanks for that information. And I think once we see those financials, we might understand a little bit better how it operates. But just did some figures there on what's coming in there. The 26,000 plus GST from Sport Northland. Where does that money come from? Is that from Sport Northland's funding through other sources?
6,000 from Sport Northland?
Is Sport Northland contract service?
Oh, that's
Anna's
fund. So KDC pay Sport Northland 26,000, and we employ at the moment Helena as the community.
Oh, so the KDC pays that to Sport Northland, not the other way around.
Correct.
And so then the 358,724 plus GST, that's given to Sport Northland from KDC?
From KDC,
yeah. So KDC gives a total of $442,432.60, including GST per annum to Sport Northland.
Correct, yes.
And what does Sport Northland put into it?
So last year, in this particular financial year, we only about 6 or 7,000 in grant funding and some insurance.
And does Sport Northland own the pool now?
Yeah.
Yes, we own the pool, yeah.
Funded?
No.
Okay, on the figures that I've done here, if you take your 442,000, etc., and divide that by what I thought you said was 16,000 attendances,
yeah,
it comes to $27.65 per visit in tea. We've just heard that fee for attending is $5.50, including GST. So we are subsidising it by over 400% from the general rate at the moment, and the general rate take that we're funding with is about 1% of rates.
Ooh.
Wow,
doesn't make sense. And that last year was a poor year, but in saying that, through the doors, there's normally only about 25,000 would be the rough average. So it's still a sort of figure for what it costs to run a pool.
And how many people does that involve? Like, do you have concession tickets where you pay 10 visits and get a discount, or?
All sorts of different membership options. So there's concession cards, there's reduced prices if you've got, an accessibility card or a gold card or that sort of stuff. So there's a range of different prices. There's family passes, there's month passes.
And that's really reduced. Does that average out at $5.50, or is $5.50 an individual entry price?
$5.50 individual entry. So
what does it average out at all of your memberships? It's a very different figure to $5.50, obviously.
And there's a lot of freebies given away as well, where we elect full students. We have certain days when it's fully free to come in.
And did those freebies, are they included in the 16,000 attendances?
Yes, however, there has been come through the gate. So sometimes it's a guesstimate on those days when it's free.
In general,
we get hundreds of people and we just have to guess at how many are in.
Okay, and is all of that analysis part of the package of information that was missed and being attached to here in terms of how your model works?
Just the financial spreadsheet.
It would be really good to see that modelling, and we could send that through as well, so we can actually see how it works in terms of tendencies. Yeah, that'd be great. Thank you very much.
I'll take two more questions before we move on, because time's running short. I'll take one from Karen Wilson-Collins and then another one from Councillor Paniora.
Thank you. Thanks for the presentation and report. My question is really to do with the timing of the report. Because I think you alluded to at the beginning of your presentation, we're halfway through the current season. I'd suggest we're more than halfway through. Is there a reason why we're receiving a report in February that for the period that ended in the middle of last year? Is there any and is there any way it could be brought forward?
Yes, it should. Normally, it's actually occurred at the end of the previous year. So November, December is when we should normally present. The report was provided at that point, but some of it was, as you'll see, the financials weren't quite finished. So Hayley and myself were back and forth around just getting the report as accurate as possible to ensure that it was provided in that form that it was up to date and legible. And then it's just ended up with Christmas, and we've ended up at the point where we are now. So probably about 4 months later than it actually should have been presented.
And you'll remember November and December agendas were really packed as well, so.
Yeah, no, I appreciate that. Yeah, even November's probably a bit, yeah, probably, well, no, November's probably okay because it opens about October, doesn't it? It's just, what I'm alluding to is that there's a lot, so coming up next year for your next report, there's a lot of feedback that possibly could be given and ironed out, perhaps. It'd be good to do that as the season starts or before the season starts. For future reference.
So potentially there could be a conversation without the report, because by the time, which is where we found ourselves last time, financial year is the 30 June, so we're not actually getting anything back from the auditors until September. So we're actually only able to really present something that's finalised when the facility's opening again for the new season.
Right, yeah.
That's sort of the earliest we could probably get would be the end of September, beginning of October. However, it's normally been into November when we do present.
Okay.
Appreciate
that. Thank you.
Okay, Councillor Paniora, one last question, please.
Yeah, thank you. Through the chair, I was just going to make the point that Councillor Wilson-Collins made is, but also, are we not able to have a look at the reports before they've gone to accountant, because that's where a lot of the lag time comes into play. And the one other observation that I wanted to make was I actually had a look at the concessions pass, and it didn't seem to have much attention put into it, because based on the number of weeks and months that the pools are open, I would have had to go at least 3 times to 4 times a week, I worked out, just to get that $5.50 sort of, I guess, savings. And then after that, it was a savings. So the concessions aren't really going to entice many people. And I'd be interested to see how many concessions people do take up. And then finally, if this agenda item does come back, can we get some more detail around what is being planned for the future to make this viable? Because it doesn't seem to be a viable business. And if it was sitting in the business world, it would have been a business that would be closed down already. Can't stress the point enough that our ratepayers are already under the pump in a lot of the increases that, they'll be receiving in the next rates instalments coming up. Thank you.
Thank you. I'll take one more from Rachel.
Thank you. I just had a question that I sent in previously, and it says in the report on page 8 that an upgrade of the pool will be one of the potential solutions. We also anticipate this plan will be available to inform the 24-27 LTP. So I guess it's more to staff. So when will this information be coming to us, since we've been going through and looking at the LTP figures? And then when is this going to come to a meeting, I guess? Do we have a plan or?
There is like a high level number in the LTP that we have discussed, but we haven't got any finalised figures. So Sport Northland will need to provide those to us.
Because it's getting very tight.
For the long-term plan.
It's on.
For their investment.
See, Sue Davison wants to say something over there.
So to the chair, which covers the 358 places inflation plus the top that of 20,000 inflation in the first year. I will be pointing that out to the United States to take all the functions.
But is that for the upgrade, or is that just what it is per annum?
Plus.
So, and we're 1 year into a 3-year contract currently, so there's that CPI increase on that figure for 3 years.
Okay, very last, make it quick.
Thank you, Mr. I will make it quick. I just simply, I would like to understand as council what the arrangement is that Sport Northland own the facility, yet we seem to be paying for it. Simple as that. I'd like, there may well be something in the background. I don't know how that happens, but I'd be interested to find out. Not necessarily now.
And Sport Northland has not put their hand up to own facilities. In all three situations in the pools we own was because if we didn't, it appeared that they would probably fold and that they would not be open to the public. So we've actually picked them up to ensure that the doors can stay open. If the council want it on their books and would like to manage it, we're up for those conversations. That's what the current says. The model that's currently in place is not working and it needs to be looked at. Yeah.
Okay. Well, thank you very much. I think we've got a good understanding going forward of what we need to look at here. So thank you, Stu and Scott and Anna and Heidi. So we'll move on to the next item, which is item 5. Christine Toms will be presenting that.
So, Mr. Mayor, thank you. We're going to race to get through item 5 to finish the LTP items for now. And Sue and Christine are going to present that. And then we have Bruce, I believe, in the audience as well. So then we'll move to the public excluded agenda because Bruce has come up to talk to us today. So we'll do that first and then we'll move back into open with time. Okay, so there you're up. Yeah. Oh. As far as the pool goes, if I could just sort of talk about that briefly. So that has been through council decision making previously. It's a model that they're quite right. They took over it to make sure it didn't fold. And it's mirrored in Whangarei and the Far North as well. So all the pools in Northland running on this model at the moment.
Can you get some information on PLM in Penmill Lagoon, which is operating for many years successfully?
Okay.
We can learn from them. Yeah.
Thank you.
Okay.
Christine. And Sue, is it?
So it's a race postponement and remissions. Thanks a lot.
So we've had conversations prior around our rate postponement and remission policies and the requirement to or not to review them. Three Waters at that time had to be excluded from the conversation, and so now that we've been given a different direction, we need to also include those. The current rates postponement and remission policies relating to water are part of your appendix, that part of the report. And we just need to understand whether you would like these reviewed at this point or not. Statutorily, we do not need to because they were reviewed 3 years ago. So it's over to council to give us direction as to whether they should be looked at or just continue as they are. Thanks.
So the key ones are remission for leaks. Yeah, and remission for schools.
They probably should have been on the slide.
Thank you.
We're proposing everything's the same. Unless there's any issues.
Don't add to it.
Okay, and this is related specifically to Three Waters, is what you're saying?
Yes, yeah, it's only the Three Waters we're reviewing. We've had good guidance from you on the other things.
Okay. Any discussion? Councillor Erin Wilson? Collins?
Thank you. Yeah, no, my discussion is that if we're just reinstating what we had previously, then that's the simplest thing to do, and just do it.
Okay, councillor Howard?
Thank you, Chair. To the government, Councillor Wilson's raises, Williams' raises too, but do the government pay rates for schools, or is it just? They do.
So the schools themselves, actually, sorry, that's twofold answer. They're non-rateable, but they pay for the services they're connected to, so they do pay for the wastewater.
Okay.
And one of our policies is to do a calculation to make sure that we're not overcharging them for the PANs that they have. So we take into account the number of pupils and teachers at the school and charge them on a pro rata basis, which comes from very old legislation, but seems to work.
So that's very interesting. So you do have a pro rata based on numbers of pupils, not just a straight PAN charge when it comes to school.
So that's what our policy says. Yeah.
Okay. All right.
Councillor Larson?
Oh, thank you, Your Worship. Yeah, so that's a preliminary discussion recently about the implications of PAN charges for accommodation operators, and we've heard of a couple of instances anecdotally where people have chosen not to set up accommodation because of the PAN charges. And I just want to raise here, because it's kind of quite closely related to this, that this might be one mechanism that we could deal with that, rather than having a separate rating or what have you policy around that for those facilities. And so I haven't really got much to say in terms of the question. I'm just saying, hey, we might be able to deal with that, because we do have a shortage of accommodation, particularly in the high demand places like here, and no one's really put their hand up to any extent to develop a facility. Maybe we can help it happen, which then feeds into our whole general local economy in terms of all of the things that people do when they come and stay here.
Good point.
Councillor Nara?
Thank you, Mr. Mayor. Just clarification, this delegation thing which on yellow and then struck off. What was the idea? Because I'm just thinking, if it's a current policy, the delegation is a good idea. Why we should be coming to us?
Good. Yes, and so we've done that on our previous remission policies as well. So the advice we've received is that we should be doing delegations under a delegations register, which is linked to the Local Government Act.
Yeah.
And so our lovely Shireen there is working hard on making sure that all of those delegations are moved into a delegations register. You look one place for a delegation, which is the delegations register, not a policy. Because if you wanted to change your delegations, you have to change your policy as well. So it's to tidy things up and make it more
Okay,
aligned.
all right. So we are taking a decision here, isn't it?
Giving us direction as to whether we're going to go ahead with a full review or whether we're just going to adopt them as they are with those minor changes.
Well, I would say delegation is a good idea. So it's something which can be done at the council level.
Right. Councillor Vincent.
Thank you, Mr Mayor. Yeah, I'll just follow up on Councillor Larson's comment. I guess the basis for setting our, in effect, discount for schools is the fact that generally speaking, they're occupied from 9 till 3, say 5 days a week. And so that their usage would not be, since we're not metering the output from input into the sewage system. So there may be a third way in dealing with accommodation outfits where their accommodation, the occupation level is not the same as for a residential dwelling, but nonetheless more than you would expect for a school. So there might be some other mechanism there that could provide a minor incentive perhaps.
A middle ground, whereby they're to some extent cross-subsidised by the masses, but not completely.
Well, no, a more accurate reflection of their actual usage.
There's no doubt about it that within the district, there's been people wanting to put accommodation in the last 10 years and they've been put off by upfront charges, which like toilet pain, which actually means they don't come, and then now we're suffering a severe shortage, which affects our tourism, our golf tourism, all that stuff. Councillor Larson?
Is it toilet pans, or is it development contributions per connection, or is it a combination of both? And probably determine where that is, because this might not fix it.
Yeah, I'm just going to add to the conversation that what you're talking about is not pans.
No, I used the wrong terminology.
So then I'm taking it, it's no change to the policy, we can just add this in as it is.
Yep.
But they want to look at.
Yes, please.
No, because we just said it's development contributions that are the issue, the upfront cost.
Okay.
Okay.
Right, any further questions? All done.
Thank you very much.
Right, next item, we're going to move through to PEX. Is that correct, C. Maris?
Yes, indeed, Mr Mayor, if we could. And we've got the first item is the external presenter, and that's Bruce Lahore for NZMCA. So just Bruce, and introducing you. We can talk with John straight after with Glen Scully and Kelly's Bay.
It's not live, I mean, we have to move fast. No, but you're telling the public that what we're doing.
It's okay. The titles are okay. The titles are okay. But, yep, cheers, Bruce, but if we could just not start yet. You know, let's go.